All right, good morning, guys. Today is Friday, April the 21st, and as usual, we'll be going over analysis for US 30, gold, and EU. Just to check back on what we've done so far for the week. Just a second. So far for the week, so yesterday we only took one trade on the live session. Like one official trade, because I did take some gold sales personally. But the EU sell we took yesterday went to full TP for 20 pips. So this is the EU sell from yesterday. So the reason we entered this sell is because price closed below the 9 EMA, retested and closed below the 9 EMA. So actually the entry was off of this semi-bullish hammer candle. But then, yeah, so price, we went a little bit into drawdown just like for 2 or so pips, and then price reversed the whole way back down. So the same thing for EU today, right? You can see EU is still in a heavy, wait, this is the 30-minute. Let me change it back to 5-minute. But you can see we have nothing but sell zones on EU, right? Same thing as yesterday. If you see we are trading a day when we are trading and we are just in like heavily colored zones, as much as I don't like trading that because, or having that chart open because it just hurts my eyes. But it's the same thing from yesterday, right? You can see we're in heavy supply zones for EU. Now let's take a look. I think EU is reversing from where it reversed yesterday. So today, the setup that I would be looking for, so keep in mind, it's also a Friday. Fridays are bound to have a lot of manipulation. So honestly, so this would be a sell on EU based on like yesterday's, and there's a new indicator I'm trying out. I'll go over it with you guys. Right, we wait for a good enough trend. So this trend, the last time price was below the 9 EMA consistently. That's 1.09546 up to, so this is about a 40 pip trend, right? So ideally on a pair, that should be considered a trend. And then ideally how we catch the reversal is we wait for closure below the 9 EMA on the 5-minute, retest and closure below. So this ideally would be a sell. However, the reason I won't take it is A, it's because it's a Friday. B, it's ideally where price reversed from yesterday. So ideally EU can possibly be creating a double top. So if we go on the hourly, this might be a possible, no, not a double top, but we have a bunch of resistance here even on the hourly. So in any case, for any reversal, I would prefer to wait to around 1.10100, which is ideally the area that I marked up yesterday. So give me 1 second. So gold and US 30. So let's see what we can catch today. Gold and US 30. So US 30 is dropping. We didn't catch any trade on US 30 yesterday. Did we? I feel like we did we? Oh no, we missed a trade on US 30. The thing with US 30 yesterday, it just spiked up without us. So if we try and go back, ideally it's better seen in the Discord. Where did I post it? Maybe I posted it in the general chat. Let's see, general
Yeah,
chat.
yesterday you put a pending order. I didn't know. I don't know if you went in, but
Oh, no, yeah. So this was the pending order I had. So since it got missed here, I just closed out of the pending order. So this is the pending order we had. And also going back, I'm trying. I thought I had sent like a screenshot of before. Yeah, but ideally, what we were looking for yesterday was closure above the trend line that was down here, and then retest and closure above. So the candle that actually spiked up, it's away from the screenshot. The candle that actually closed above the trend line was a heavily bullish candle, and then the reversal didn't happen until here. So my entry was around 33,752, and you can see price missed my entry by about 1 or 2 pips. So if in future, if you ever set an order, and then, so keep in mind, I don't recommend anybody to keep trading or to keep holding pending orders after 11:30 a.m. Eastern Standard Time. But if you do have, like, for example, right, yesterday I had this pending order. So as soon as I came back, like I didn't even care what was happening, but I came back to the charts and saw that I literally got missed by like a pip or two. At that point, the trade is still valid, right? However, that was when I should have been filled in, right? Because what were we waiting for? That you should always ask yourself that, right? What was the confluence for this trade? The confluence for this trade was the retest of the trend line or retest of the 4-hour bullish high. Okay, that's one, right? Number two, what are the three confluences we use to enter any given trade? Number one, it's retest of the 9 EMA, retest of structure, or retest of the trend line. So the trend line was this one down here to the downside. The structure was actually, this was like a lower high or whatnot. I think it was like a lower high or something like that. The 9 EMA was all the way here. So you should always ask yourself, where are you going to get the optimal entry? So of course, the optimal entry here was retest of the bullish high or the trend line. However, we did have this structure right here, which was a lower high. So at that point, right, it's up to you to do the math. Do you like here the difference between this structure, this lower high, and the trend line was maybe 5 or 3 pips. Our TP is like 50 pips on US30. So that's not gonna make or break your trade. So it's up to you to decide, are you gonna enter on the structure, or are you gonna wait for retest of the trend line, which price might not actually come back down there. So yesterday when I saw that it had retested this structure, this lower high here, and went all the way back up and past where my TP would have been, I actually just closed out my pending order, because always ask yourself, right, before you enter any trade, ask yourself, am I entering on the retest of the 9 EMA, retest of structure? And by structure, I mean like a high-low, established high-low period, or retest of a trend line. That will always guide you, whether it's in a pending order or whether it's in a market execution. Does anybody have any questions regarding that? If not, I'll go ahead and draw our 2 trend lines for the day. So this is a hanging trend line on US30. I don't know why my mouse is lagging. Give me 1 second. Let me reset this. My mouse keeps lagging. I think I'm missing. Let's try this again. Okay, hopefully you guys are able to see that. All right, so this is a hanging trend line on the 5-minute. When we go to the 1 minute, I'm pretty sure it's an established trend line. For anybody joining us today for the first time, well, based on the people I see here, you guys have been here with me, but I know there's people who joined today. But anyway, so the 5-minute, this is a hanging trend line. And this is also a hanging trend line currently on the 5-minute. But you can see we are in an uptrend on US30. Let me reset this. So we have a possible death cross coming in on US30. My charts are all over the place. Let's see what we have. So for US30, on the hourly, this is the hourly. Okay, so for US30, we need to wait for these trend lines to be established. Same thing as yesterday, right? Yesterday we waited. Unfortunately, the trade came after the live session, but we definitely need to wait for this trend lines to be established. Again, don't try to catch a trade from a hanging trend line. That is one of the worst things you can do. Always
Gold
wait.
is taking off, and we got news in 5 minutes.
Okay, so 5 minutes before and after news, we don't really trade, but we have a golden cross coming in on gold. So gold on the hourly, I have this. That's an established trend line on the hourly. Based on what I can see on gold, I am bullish on gold. In any case, based on news, what do we have here? Hourly bullish high, 4-hour bearish high, 4-hour bearish low. We'll just wait for news to pass. But keep in mind, EU for me is a sell, but I would rather sell around 1.10 area. So for US30, we need this trend lines to be established as static trend lines. So for now, they're just hanging trend lines. We have an hourly bullish high, hourly bullish low here. Yeah, I really don't see anything. So gold is possibly the only thing that I can see here. All right, just a second. I'm checking this account that's copying. I see. Yeah, so let's just wait for news to pass. That's fine. So for this account that's copying the US 30, NAS, and gold signals. So keep in mind, this is coming off of a $1,500 live account that's copying to a 100K challenge. Oh, I'm sorry, copying to a 100K live, copying to a 300K challenge, and copying to also a 50K challenge that I started for a friend yesterday, and then copying to this 100K demo. So even the gold, so keep in mind gold, the gold, NAS, and US 30 signals are the highly profitable signals. EU and AU, sure, they are. For GJ yesterday, I had to suspend the 15-minute signals because the 15-minute signals on GJ were just trash, to be honest. So right now, the signals you guys are getting on GJ are for the 5-minute. If anybody was actually using and being profitable on the 15-minute GJ signals, let me know and I'll turn those back on. But you can see today was also a losing day, even on the NAS. US 30 and gold signals. Again, you're not going to win every day, but keep it right. But the curve, the growth curve is still positive, right? This account started on April 16th. It's up 6.55%. At one point, it was up 9% in just minus yesterday and today. The account was up about 9%. But yesterday had a losing day with the signals, with the gold, US 30 and NAS signals for about 1.3%. Today is the same thing. But if I had the AU, if I had the AU, GJ, and EU signals, this loss would have even been bigger. So that's why I tell you guys, if you can focus on those three signals. On the other hand, you can focus on all of the signals, because I think we got a GJ signal this morning and shot up for a good amount of a buy. Wait, what time was news again? Let's see, Friday 9:45. Okay, in 2 minutes. Yeah, it showed up for a buy. Now, if you wait, so I think there's one person who joined the group today, and he took a good amount of signals. What's his name, like Will or whatnot? So let's see, general chat. Let's see. These were just some of the trades that I took today. Of course, they don't count towards the overall win. Yeah, but this is Will. So they joined, they took a GJ buy, US 30 buy, and gold buy. So the strategy with the signals, if you're entering them manually, if you get a buy on whatever, or buy or sell on whatever indicator, I'm sorry, whatever instrument, go to that time frame. So how the signals come in, they come in like Euro USD buy on the 15-minute time frame, 20 pips stop loss, 20 pips take profit. So how you interpret that, if I was getting a EU buy on the 15-minute, personally, I would go on the 15-minute chart. Let me turn off these colors first. Go on the 15-minute. And then after I get the signal, instead of entering in on impulse, so my AI just enters on impulse, right? I'm going to try and have it coded, which is of course spending another shit ton of money, but anyway, it's going to be worth it. But currently it just enters on impulse. But ideally, if you're entering manually, even with this return, if you just follow the strategy for entering the signals manually and waiting for confirmation, you would have a higher win rate than my AI. But my AI, of course, trades about 24 hours, five days a week. So
two things I want to bring up real quick, not to cut you off. Do you want to look into if the news is impacting the win rate? That's the first thing. And the second thing is the signals lately, when they come in, they already close the EMA, and you're basically waiting on the second candle. A lot of the most recent ones.
Okay. So let me go over that. Let's see. I'm also checking to see. I'm in like one trade for those signals. But anyway, so to answer, to finish what I was going over first. So after I would have gotten the 15-minute buy on EU, I would have waited for the retest of the, I'm not sure which candle it was, but I'm guessing it was somewhere around this candle. So I would have waited for the retest of the 9 EMA. So in this case, it would have been, and I'm not sure if this is where it was, but I can see a 15-minute candle that retested the 9 EMA. And then here, I would go do my 20 pips, stop loss, 20 pips, take profit. And there it is, right? So you would have gone into profit about 18 pips. Remember, for our strategies, if you're 50% in profit, set break even. Now for the signals, I don't set break even. I have like a static 20 pips stop loss, 20 pips take profit. So some of my trades, because I'm sleeping, right, they go to maybe 18 pips profit, and then they reverse and maybe hit stop loss. But the reason I let that happen is because I trust the signals, right? The growth based on historical, and remember, right, what happens in the past does not necessarily guarantee what's going to happen in the future. But I do know that in the past, just letting the signal hit TP and stop loss as needed, you're still going to win over time. So I do not manually intervene with any signals that are taken. The only ones that I actually, let me scratch that. The only ones that I intervene, if I get a 5-minute buy and then a 15-minute buy, I'm going to close one of the buys. I don't like being in two trades in the same direction for a given instrument. So that is the only time I'll intervene for a signal. Now, the news, how does news affect it? Previously, about 2 or so months ago, I really was watching news, but nowadays, whether it's using my strategy or whether it's the signals, same thing I just said, I just let TP hit, I just let stop loss hit. I found that just being scared of news was damaging my trading. So nowadays, other than when I'm doing it on the live session again, that's the only time that I'll be wary of news. But if I'm trading by myself, I don't care about news. Not that it doesn't matter, but if my strategies align, and if my strategies say the buy is likely, the sell is likely, like for example, let me analyze gold right now, right? We've been in a downtrend on gold. And this is similar to what we went over a few days ago, right? So after a heavy downtrend, what do? We wait for price. So this downtrend, when was the last time gold was consistently above the 9 EMA for like 10 minutes? About 2003. This is the same thing that happened like 2 days ago, right? Because I remember this same pattern we're trading. So what do we do after this? We always wait for price to close above the 9 EMA on the 5-minute to retest and close above the 9 EMA, right? So in this case, you always wait. So here price closed above the 9 EMA on the 5-minute. The next candle did not do a complete retest, but also closed above the 9 EMA. So if we had news here, I would still have entered this trade. And you guys saw that I entered a gold trade this morning with a heavy lot size. It's part of the profits that I took. So for this one, 50 pips stop loss, 50 pips take profit, full TP on that trade, right? Easy trade. And I did say for this trending, after a heavy trend, you can do 100 pips TP, 100 pips stop loss. Let's see. 100 pips TP, 100 pips stop loss, again, full take profit. Now for this one, if I was 50% in profit, yes, I would set break even. But if it was a signal, and I just entered with, of course, 50 pips TP, 50 pips stop loss, for the signal, I would just let whatever happens to happen. So for this one, give me one quick second. This account that's copying the trades is frozen. Let me sign in on my phone. I don't want to end up messing up my accounts. Just 1 second. Okay. Oh, perfect. All right. Still in profit. So if there was news here, like right here, I would have still entered this trade manually, because after we've back tested, if you watch, I forget what day it was, but I went over the same waterfall that happened on gold a few days ago. This was the same thing. If there was news here, honestly, I would have entered the same trade. Now with the signals, the time I would be wary of a signal is a signal that comes up, like I think we just got a gold sell signal. The only time I would be wary of a signal and how signals affect news is signals that come between 30 minutes before New York opens, so between 9 a.m. to 9:30 a.m. Signals that also come up 15 minutes before heavy news, and also signals that come up after heavy news. Like for right now, this candle on gold is 1994, 1979. So this is 140 pip, wait, yeah, 140, 150 pip
It
candle.
was a gold buy that just came up actually.
It was a gold buy. Are you sure? I thought it was a gold sell. No, it was a gold sell. So there was a gold buy at there was a gold buy on the 15-minute and the gold sell on the 5-minute. So I'm sure that anything that's taking this to
Yeah, that's what I
trade.
meant. It was like a opposite direction.
Okay. And I guess because of spread, I didn't get filled in on that, any of those trades, which is good. Yeah, so the signals I would be wary of are the signals that come up during news, immediately 5 minutes after news, especially if it's heavy news. And also be wary, maybe let's just say 30 minutes before news and 30 minutes before market open. Let's just put it that way to give it a generic one. Now, personally, for this gold sell, honestly, I would have taken this sell. You want to know why? Yes, to me, gold makes sense to go up from here, but keep in mind it's Friday, right? So same thing, what do they try to do? So for this hourly candle, I do see this hourly candle reversing and closing as a bullish hourly candle. Why am I saying that, right? I'm still expecting gold to probably go to about 2050. Fridays and Mondays are heavily manipulated days. So if they see people who are trying to catch those buys to the upside, what are they going to do? It's Friday, right? They're going to and that's why I closed a bunch of these positions that I took profits on today. I could have easily kept riding them, but if I didn't close this gold trade, I would have easily been stopped out by news. But I wanted to ride it all the way up. But if it's Friday, price is likely, more than likely going to be manipulated. And where are they likely to catch some liquidity to take price back up? We can form a double bottom here on gold at around 1969. So what does that fall in line with? Falls in line with a 30-minute bullish high, with a demand zone within a demand zone, with a weekly low, currently weekly low, with a 30-minute bullish low. And keep in mind, we also have a monthly open down here. So in my analysis, what I expect gold to do, I think this is just a fake out. But of course, we always want confirmation. So I expect this, possibly this. So they can definitely reverse from here, but I always try to look what other areas are around this zones. Ideally you want to buy low, right? So I do see maybe the monthly open or this demand zone within a demand zone, which is 1963, and then shooting all the way back up to come and close this hourly candle above this trend line. So keep in mind, this trend line is established, right? So what happens after a break in an established trend line? You always expect the trend line to be retested. So this trend line, if this candle closes still as a bullish candle, as a heavily bearish candle on the hourly, expect this trend line to be retested because it's a static trend line from a lower low to a high low. So either way, gold should come back up to retest the trend line and possibly maybe then reverse to the downside, or gold will pick up liquidity and close this hourly candle as a bullish candle, in which case gold, then we would have to wait for the next candle to close for us to look for any opportunity. So in any case, personally for me, I do expect either way gold to retrace back to the upside, whether it's right now, whether it's in the next hour. The confluences I have for that, this trend line has to be retested. It's simple as that. So I would be actually looking for buys down here. I know right now we are bearish on gold, but just logic and what happens on Fridays, I think this is a fake out if you ask me. Okay, so we have an established trend line to the upside for US 30. So the trend line on the downside is not established. So here, let me see. I don't know why I am kind of slow today on US 30. Not sure if it's because I'm not seeing, I think it's because I made a lot of profits today, so I'm not really looking for much. But let's see what we have. We have an hourly bullish high here. The hourly bullish low is somewhere here. So ideally also, let me look at my MT4. I want to be, yeah, so definitely US 30 is in an uptrend. So we need this to be established as a high low on the 5-minute. And then if we get a retest of this trend line and closure above, we can catch a buy. And keep in mind, we are also in an hourly bullish high and bullish low here. So actually, so remember how we trade these zones, the hourly to hourly and above zones, right? We break them down into 3. This is 835. This is, I'll call it 735 to have ease of math. So the middle is about 33,780. So let's see, horizontal ray, 780. So in any case, I will just take a small filler buy on gold. If you take this trade, so keep in mind it's Friday. What am I saying? Let me see. The percentage risk for this trade, our normal percent risk is 0.5%. Filler trades use like 0.25% or 0.125. But if you do decide to go with a heavier lot size, that is on you. But yeah, so, and filler trades, you want to ride them for longer. So maybe 100 pips take profit, 100 pips stop loss. So ideally a filler trade is to test the bias. So here I definitely see US 30 pumping to the upside. We are in an hourly bullish low. Actually, wait, as we talk, let me enter that position. Let's see. This
For
thing.
100 pips.
Yeah, 100 pips. If you want to do, you can do 50. This thing is going off without me. Yeah, if you want to do, you can do 50 pips TP, but since this is a filler lot, for filler lots, we always use 100 pips TP, or we always use double the lots, double the TP and double the take profit. God, let's see. I would have been almost halfway to TP. Let's see. Okay, am I in? Okay, yeah, I'm in the trade. Yeah, so, but ideally when I called it, it was around here. So whether you use 50 pips, take profit, 50 pips, stop loss, it doesn't matter so long as you keep your risk at around 0.25 or 0.125. So remember what are filler trades. Filler trades is a trade that if it were to hit stop loss, it wouldn't break your bank, it wouldn't blow your account. So ideally, you're just testing so that to see if price is moving to your direction. Now here, if we do get a bullish hammer candle on this candle, the wick is 762, 760. If we do get a bullish hammer candle, personally, I will size in with a bigger lot size. So keep in mind, US 30 definitely is trending up. This is a filler lot size. I'll just call 0.25% risk. So if you have a 200K account, this trade should be, you're risking $500 on a 200K account. That's not gonna mess your account. Gold, I am looking for this move to happen. EU, oh, look at EU, right? I did say EU was in a heavy sell zone. So this was just an example of like oh no, this is on the 15-minute, I'm sorry. So this is just an example I was going over, but you can see EU rejected from, what is this? Weekly open, previous daily high. We had an hourly bearish high, hourly bearish low, and EU literally rejected from a supply zone within a supply zone. So it ideally rejected from where it was yesterday.
I should have asked you because I was in a sell for EU, but I got out before news. I was in like $100 drawdown. I
Yeah.
just closed it out.
Yeah, what I'll say, going forward, so long as you're not over leveraging, don't be afraid of news. News actually, so long as you are like, the reason nowadays I'm not afraid of news is because I have all this markup. So for me here, if I was even in an EU trade, I wouldn't worry because we have so much sell pressure to the upside. we have so much pressure to the upside. Let me see. Yeah, we have so much sell pressure to the upside where price was. So it would take a lot to, and keep in mind, right? How does market move? Market moves from one area of liquidity to another, right? Minus a little bit of manipulation. And what I have here, these are liquidity zones. So they're supply and demand zones, which you can also consider as liquidity zones. So if you're in a trade, look at what's around you. Do we have bullish markups? Do we have bearish markups? Okay. What supply zones do we have there? What demand zones do we have there? If we have a lot of supply zones, so right here for EU, and you're in an EU sell, don't worry about news, especially if it's the low. I mean, I wouldn't consider today's news as heavy impact that much. The news for me personally that I care about: NFP, CPI, and FOMC. All these other, even though they're red folder news, I don't care about them. Now, if I did not have the strategies that I have right now, sure, I would care about them. But because I have the strategies that I have now, and I see what's happening, and we've traded live for the last couple of weeks, yeah, I wouldn't care about what news is doing. Okay, so so keep in mind, this right here is still a hanging, I'll just go ahead and take that off to the side. This is still a hanging trend line on the 5 minute. We still have the static trend line on the upside. So keep in mind, this trade is a filler trade, 0.25% risk. So even though it hits stop loss, that shouldn't affect anything. So the win rate so far for the month is 1.875. So even though this hits stop loss, will just be down to 1.2 whatnot. So yeah, so whatever happens, just let it happen. But right now I'm looking to see how this candle will also close. So keep in mind, it's testing the hourly bullish low also. So how this candle will close is what's going to depend, or to show where US30 is likely to head on the long term. But keep in mind, this trend line is still it's not a static trend line. I would have preferred it to be a static trend line. So currently it's a hanging trend line. So where is US30 likely to head if it continues going to the downside? We have this demand zone within a demand zone, which is around where our stop loss is. We have a 4-hour bullish, what is this? This is a 4-hour bullish low around here. We have a lot of demand zones for US30 here. We also have a daily bullish high, daily bearish high. So keep in mind, the daily markups and the daily, monthly, and weekly markups rarely show up. So keep an eye out. The only issue I have with this is that we have a daily bearish high and daily bullish high that are close to each other. But if US30 keeps breaking down, it's likely to go to either of these demand zones down here. All right, what else do we have? Yeah, so gold, nothing on gold, nothing on, so EU is still dropping to the downside. Let me check that other account I had. Okay. All right. So for today, so that's the only trade we are in, the US30 buy with a filler lot size, just 0.25% risk. And this is why I say to use a 100 pip TP or 100 pip stop loss. Now, what I'd be looking for here, the only other thing that's coming around is we do have a death cross possibly forming on the 5 minute. So that's where the 9 EMA is crossing, or will probably cross the 200 EMA to the downside. But if you can see what's been happening, the 9 EMA and 200 EMA have been ideally next to each other for the last few hours. So US30 has also been consolidating in the past few hours. So it doesn't mean that price will keep dipping down. Price can easily swing back up to the upside. Also on the hourly, there's this other trend line from the higher high. So I'll draw it this way. So actually on the hourly, we do have two trend lines, established trend lines right there. So, but for this candle, I'm really interested to see how this candle is closing. It is closing below the trend line. However, the trend line is a static trend line. So the way it's closing below I'm sorry, is a hanging trend line. So the way it's closing below here doesn't really mess me up with this trade. Now, if this was a static trend line, so if we did have a high low here, I would be concerned that this candle closed below. But right now, the trade to me is still valid. The only other thing I do see for this trade is if you see on the hourly, we do have a static trend line. So keep in mind, static trend lines almost always will be retested. So that's why I'm expecting gold to go back up and retest this trend line around 1985. US 30, we do have a static trend line at the bottom. So US 30 can actually keep dropping, and the area of rejection is around 33,693. Which is around, what's around there, right? The same area I showed you guys around the 4-hour bullish low. So US 30 can actually keep pumping down. So for this trade, let's see how this will close, because I see two possible scenarios. I do see us having to close this trade as at break even and just waiting for that buy around 33,654. Yeah, but let's see how this trade goes. Gold, 30-minute bullish high, bullish low. Let's see what we have on gold. Trying to see how much margin I have for this. Yeah, so I do expect gold to go back up, but right now I'll just stick with this US 30 trade. Oh, I forgot. Right, the third entry, where is the third entry we normally take? You guys need to be reminding me. The third entry is always, so when we have an hourly bullish, hourly zones and above, we divide the zones into 3. So the top, the middle, so the middle is where we entered the trade, and then the bottom. So the top is where you take your first filler trade. The second, the middle of the zone is where you take your next trade, which is a bigger lot size. And then at the bottom is where you take your last trade with a huger lot size. So I actually missed that. So I don't know if anybody caught the buy from down here, but the idea for this, for breaking these zones into 2 is so that if the trade goes against you, like consistently, and you're stuck in the trade, when you get into a trade down here and you're using a bigger lot size, you can average down and just close your trade ideally in profit. Because personally for me here, this trade we could have taken with a 0.5% risk. So this trade, the filler trade, we took with a 0.25% risk. So this trade we could have taken with a 0.5% risk or even a higher risk and just gone for 50 pips TP and 50 pips stop loss. And you can see at this point is where we would have been like, okay, either go ahead and close both trades out, in which case you would have been heavily in profit, or just close half of this one or set break even. But I don't know if anybody took the trade at the bottom, because we've gone over this strategy a lot of times. So keep in mind, for me, I'm already up for the day, like what is that, maybe like 2% or maybe close to 3%. So I really don't care about 0.25%. Yeah, but the strategies will always apply. Yeah, so let's see, this is I wanted to enter that gold trade, but anyway, so for this gold trade, I would say it's better to wait for the reversal strategy, right? What's the reversal strategy we talk about? We wait for closure above the 9 EMA on the 5-minute, and then retest and closure above the 9 EMA. Now the other thing I'm testing, so this 9 EMA, the basic 9 EMA or EMA indicator is a lagging indicator. So what that means is that price is normally so far away from the indicator, and by the time, I mean, it's worked for us a good amount of times, or like heavily, especially like today. If you're using it for this reversal strategy on gold, you could have caught this gold buy easily. So this is the one trade I took earlier that I secured a bunch of profits on. But I did see so one thing I always do is I always try to find better things that can help us. So I did see a zero lag EMA indicator. So it's called zero lag EMA. So this one that has 1,828 installations. So let me just turn that on. So this one ideally sticks to price. Let me turn the other 9 EMA off first. So by backtesting this, honestly, it depends on how you want to use it, right? So it can either, the best thing about this zero lag EMA indicator or 9 EMA or whatever EMA, you can use the 9 or the 200 or whatnot, is that prices, the candles are so close to the indicator. So ideally, this indicator would give you an earlier entry than the typical 9 EMA indicator that we use that has a little bit of lag. So for this one, just by backtesting that waterfall we saw, let's see. So this was the last time based on this indicator that price was consistently above that 9 EMA. Now keep in mind the previous 9 EMA, the last time price was consistently above was what, 2003. So let me turn the other one on. Yeah, it was around 2000, no, yeah, 2003. So you can see, so this is a double-edged sword, right? So I'll show you how. So you can see with the other 9 EMA, the last time price was above was 2003. With this one that has zero lag, the next time price is above the 9 EMA is about 2000. So you lose a 30 pip calculation for your entry. So then what happens next? Ideally, with our reversal strategy, we wait for about, so I wouldn't consider this a trend. So for gold, a trend is about 150 pips. So for this particular one, the next time price is above the 9 EMA, retested and closed above, is about 1995. So this is a 50 pip trend. So I don't consider that a heavy trend on gold. So to establish a trend based on my own strategy, you need an instrument to move about. So for gold, you need gold to move about 150 pips without closing above and retesting the 9 EMA. For FX pairs, it's about a 50 pip trend. For US 30, it's about 150 move. And also, during the trend, you don't want huge candles. So you want like ideally equal candles. The size of the candles shouldn't be that large. So it's ideally a small and smooth, consistent trend. So here, I wouldn't consider that as an entry. So ideally, I would wait for the next time price closes above the 9 EMA, retest the 9 EMA and closes above, which the entry would have been here. So let's see, the entry for that one would have been here. If we turn on the other one, the one that has some lag to it, the entry would have been where? So around the same place. So the entry for this one would have been around the same place, which would have been here. Yeah, so so just test out both and see which one works for you. The best thing I've seen with this zero lag EMA indicator is that it can give you a snipe entry. So let me see another example. I think because I backtested this for like 5 hours. So I'm trying to see a trend, a nice little trend that we can see. Let's see this. Yes, so this was the trend that I saw. So this price was consistently above the 9 EMA or this zero lag 9 EMA. We had this closure below and then another closure below on the 5-minute. This trend here was about at 100 pips. So again, for gold, to me, that's not really a trend. I'll wait for about 150 pips. So price kept going up. And then guess what here? It closed above. The next candle retested the 9 EMA and closed above. Per our strategy, right? That would have been a short. So this is a double-edged sword that I'm talking about. So you go for 50 pips or 100 pips or whatever you want to do. So for this one, if you went for 50 pips, right, definitely you get stopped out up there. If you went for 100 pips, so the reversal strategy, you can always go for 100 pips. Right, so reversal strategy, you can easily go for double the what am I looking for here? For the reversal strategy, you can go for double the TP and stop loss. So if you went for 100, this one I think you could have survived, but I don't like holding trades for that long. Okay, so let me minimize that and turn on the other one. Okay, so now on the other hand, if you had the other one that has some lag, this right here wouldn't be an entry. Let me turn off the other one. So this right here wouldn't have been an entry. The next entry would have been
Just a quick question. Do you think we can get another entry on US30? It just crossed above the
yeah,
9
right.
EM.
So it's the same thing, right? You need to wait for retest of the 9 EMA and closure above. So yeah, you can enter, but you need this candle to retest the 9 EMA and close above if you want to scale in. But keep in mind, we do have a supply zone right here, right? So where US30 is rejecting from, it's rejecting off of a supply zone. So 33, between 33,804 and 33,797. Yeah, but for the buy is valid. However, you need to wait for the retest of the 9 EMA and closure above for a buy. And see, there you go. Came back up and closed above this trend line. So same thing I said. So I wasn't worried about price dropping. So long as the strategies line up. And let's see, gold, same thing, right? Same thing I said, gold is headed back to test the trend line. So yeah, this is just an easy way of making money, if you ask me. Yeah, so for this indicator, so let's see. So for our own indicator, or not our own, just the basic EMA indicator that has lag, the position you would have entered would have been up here. So keep in mind, the other indicator gave you an entry around 1990. This indicator is give you the lagging one, which is the basic one that a lot of people on TradingView use, gave you like a 20 pip gain. So for this one, if you're using the same 50-50, let's see if you'd have gotten stopped out on this. So for the other one, you would have definitely gotten stopped out for 50 pips TP, 50 pips stop loss. For this one, let's see, this would have been a tight one for you to hold this particular trade. So for this one, yeah, even for this one, you'd have ideally gotten stopped out. Yeah, so play with both the indicators. So the zero lag EMA indicator on TradingView. So again, the zero lag EMA is, so if you go to indicators, it's called zero lag EMA, the one that has 1,828. The basic one, which is what a lot of people use on TradingView, if you just look up EMA, it's the moving average exponential. So that's just the basic one from TradingView. So this one has a lag, the other one does not have a lag. So the zero lag one can definitely give you a sniper entry on any instrument that you are trading. Let's see, for this one, custom period. Yeah, so I don't know if anybody took that gold trade, but you know, same analysis. You know, some of these things are too simple, and that's why I especially tell you guys, don't worry about news. Like, leave. So long as we're not forming into trades, don't worry about news. Let news play out. In any case, like, why wouldn't news be to our own favor, right? So you always have to think that, because when a lot of people think about news, they think that, oh, trading news is dangerous, right? Why are you thinking that trading news is dangerous? It's because A, you might be over leveraging, B, because you don't want to see drawdown in your account, right? Zero, I mean, a good amount of my trades are zero drawdown, but you know, we've seen here that we've had trades even for this particular US30 went into drawdown almost 70%, but came back up in profit. So find a strategy that works, whether it's mine, whether it's yours, whether it's somebody else's. Find a strategy that works, stick to it. Don't worry about all these other things are just, you know, is basic, right? In any case, if you think about news going forward, think about news this way. Hey, news is gonna let me hit my take profit, right? Because if you're scared of news, you're scared that you're gonna hit stop loss. So why not change that around and think of, hey, news is gonna give me my 1% for the day. And there you go. And that's why, like right now, when I'm analyzing, I'm in this trade right now. And personally, I didn't go for a 0.25% risk because I'm already up like 4%. So if you know me, you know that when I say I didn't go for that, you probably have an idea of how much I went in with. Yeah, personally, I will close out this trade only because I'm using a heavier risk. I didn't go in with a 0.25%, but I'm only closing because I went in with a bigger lot size. Actually, not bigger lot size. I just risked a big amount of money. So the lot size is not that big. Yeah, but for you guys, keep holding 0.25% risk. So for the scaling, right, this is what I was talking about. Wait for the retest of the 9 EMA, wait for closure above. So actually the retest, the other scale in would be closure of this candle. And look at where this candle is going to close at. It's going to close at around the hourly bullish high. So this would be the scale in. I'm not gonna call it. I'm not gonna, if you want, feel free to jump in, but given that it's a Friday, we are bound to have a lot of manipulation for the day. So I'm not really looking to encourage even sizing in on this position. But if you do decide to take it, not to say it's not gonna go, it's not gonna hit, but so use this as a confluence, right? Where is price likely to head? So right now, it doesn't make sense for price to come back down. The reason I'm saying that is, if I look, I see a supply zone within a supply zone. I see this trend line that's already established. So to me, we have more probability, and we also have an hourly bullish high. We have high probability of price going up and at the very least rejecting from this trend line, which lines up with this supply zone within a supply zone before coming all the way back down. So for me, it's more probable that price will keep going up. Now, will I size in? No, I'm already out of that position because I went in with a bigger risk. But if this trade does hit, of course, I will count only the 0.25%. So my personal returns, I don't count them in this little form that we have here. So if this trade wins, I'm just gonna put in here 0.25%. The other thing, remember you should set break even when a trade is 50% in profit. So for this trade, you're already up 781. So you're already, you're so far into profit. So this trade should be at break even. Now, for filler trades, you don't have to set break even because you're not risking that much. But I know maybe some of you guys bought down here from the hourly bullish low, or maybe you scaled in right here from the closure, because there's somebody who asked a question if I would buy, and I said yes, a buy would be closure above the 9 EMA, retest and closure above. Yes, so that is still a valid buy. But anyway, this trade right here should be at break even. If you don't want to put break even, just make sure you are not over leveraging. Gold, there you go, easy, right? This to me is so, is when you trust your strategies and you trust the trading, trading becomes so easy, right? So when I see some of these things, especially trend lines on the hourly, we had the same thing with US30, right? You guys remember this hourly trend line? We once got faked out by it, but I remember this hourly trend line that we have traded for 2 straight days, right? Same thing. When you have a trend line that's established, especially on the hourly, just use that. If that trend line is broken on the hourly, whichever direction, look for an entry to take price back to that trend line. Static trend lines or static trend lines, stroke or forward slash whatever. Well, I'm an IT person, so that's why I'm saying forward slash. But static trend lines, what do I mean by a static trend line? A static trend line or an established trend line always comes from an established point of structure, so a established high-low period to another high-low period. So the reason I didn't draw this trend line to this high-low, to this lower low, which is around here. If you have multiple high-low periods, you can always skip the second one. So an established trend line either can come from the first high-low to the next high-low. Now, if previously we didn't have this high-low here, higher low established, initially the trend line would have been this, from this lower low to this lower low. But as soon as this high-low was established, I edited this trend line and connected it from the lower low to the higher low. So remember, for an established trend line, always the first point and the second point of connection should always be established high-low periods. Now, if you do have multiple established high-low periods on a trend line, the trend line does not have to touch the second high-low period. Make sure it touches, if you only have 3 established high-low periods, make sure the trend line, if they are not in perfect alignment, make sure the trend line touches the first point and the third point. If you have multiple, like 6 or 7 of them, make sure the trend line touches majority of them. So whether it's from the first to the second to the fifth to the seventh, or whether it's the first to the fourth to the sixth to the seventh, just use your own analysis on that. So yeah, so here, same thing I was looking for. here. And for me here, I wasn't worried about the hanging trend line, right? For me, hanging trend lines, I actually don't consider them. And I did tell you guys, do not trade on hanging trend lines. So for here, right, there are people who could have said, oh, US 30 is dipping down. Let me catch a sell from this trend line. No, in any case, never, ever, ever trade from a hanging trend line. You'll probably never see me do that. If I do, just call me out. Maybe it's FOMO. But the reason like we entered this buy, this was a static trend line. A static trend line is almost always going to be retested. The only danger with this trade was we have this established trend line on the hourly. So keep in mind, price is likely to also come back down and retest either the static trend line on the hourly to the downside, or retest this hourly trend line to the downside and continue going up. So there's a bunch of things that can happen. So if you look at this hourly chart to my right, what do I see happening, right? We do have this supply zone within a supply zone that's around here. So price can come. So ideally, this is what we want to do, right? So that this trade at least hits take profit, go there. Price can come, retest this established trend line and go all the way back up, right? That's scenario number one. Scenario number two is if it can come and retest this static trend line to the downside and either go up or break down, close below and retest and continue below, right? But if you ask me, what do I see as more probable? Today is Friday. Friday is a trending day, more than likely, or let me switch that. Friday is ideally manipulation kind of day. What do I see happening, right? I see price going to the upside, trending to the upside. Let's see where price is likely to grab liquidity to come back down. We have an hourly bearish high here, 30-minute bearish high, hourly bearish low. So I do see a trend going maybe for the rest of the day, and maybe Sunday. This is what I see. So look at where these two trend lines intersect. Still the same thing, right? So if price was to come down here, it would ideally meet both the trend lines, right? So the established trend line from the upside, the established trend line from the downside. So at this point, if price comes down here, this is the best place for them to reverse or to drop US 30. So for here, based on what we'll be trading that day, I would be looking for continuation to the upside. Now, if we did break down below here, what is likely to happen? If we break down below here, we are likely to break down below this established trend line and also this established trend line. That is more than likely going to line up with this. And then we can either get a retest of this trend line, but ideally this would be the ideal sell, and then continuation back to the downside. So this is especially trend lines for me nowadays, I just see them automatically, and for me it's just a no-brainer to trade them. Does anybody have any questions? So gold played out exactly as I said. I said that we have an established trend line on the hourly that was broken. That trend line had to be retested more times than not. Well, doesn't always happen, but had to be retested. EU on the hourly is just a bunch of consolidation. So personally, until EU breaks above, actually, I just want EU to break out of this zone. We definitely have a lot of selling pressure, and we have a bunch of supply zones to the top. So yeah, I'm not trading EU because I don't like trading all these colored charts or colored zones. If I was trading this, honestly, I would just turn off those zones and look for my own trend lines, because I don't like trading in zones that look like that. Not because they don't work, they work, but visually it's just annoying to trade in such a zone. Does anybody have any questions they want me to go over? So I did say today is Feedback Fridays. So ideally today is where you ask me, maybe you're struggling with something, how would I deal with it? So yeah, feel free to ask me any questions regarding anything you're going through.
So for the 9 EMA, I just uploaded the, hold on, let me see. Okay, didn't save it. Okay, so I'm gonna upload the 9 EMA indicator. What was the name of that indicator again? You said was it
zero lag? The one, yeah, zero lag, the one with 1,800.
Okay, so for the setting on that one, okay, let's see here.
So for that one, it just has one setting. So the period, right? So for us,
yeah, period 9.
yeah,
Okay,
so
that's what I thought. Okay, cool. Okay, and then so once that signal pops, we can either take the trade or we need to wait for it to retest the 9 EMA
Yeah,
with
you
a
you
full
needed
candle.
you wanted to retest and close. So for the signals, don't worry about closure above or below. Of course, it would make sense for you to wait. Personally, for the signals, I don't. If I'm trading them manually, I don't care whether it's gonna close above or below, because when the when the signal is gonna pop up, more than likely price is going to be a little bit far from the 9 EMA. So just by having that slight retracement, and actually that's also another trade that I took this that gold trade aligned with the signal with the 9 EMA retest and all of that. But ideally, when you have that retest to the 9 EMA, it gives you so much lag that it's not going to matter whether it closes above or below. Sure, the retest candle can come fake you out and go all the way to stop loss, but based on these returns right here, you have a higher chance of winning. Yeah, and today I just closed this account for the day because it went into drawdown. What? How much did I lose today? It went into drawdown 3,000 for the day, 3,500 for the day. Yeah. So based on this return, you have, even though you enter actually, if you enter on retest, you'll have a higher return than this. If you enter on impulse, this is the return ideally that you'll have. So ideally, for me, if I'm trading the signals manually, I just wait for the retest of the 9 EMA. I don't care whether it closes above or below. Now, if you want to wait for closure above or below and maybe do your trend lines, sure, you'll probably even have a higher win rate than the than the AI, or than the person waiting for just the retest of the 9 EMA. So this is mostly a preference thing. How I teach you guys is just my way of doing things. Again, I don't win 100% of the times, but the best thing you can ever do is to have multiple confluences. So if your confluence is to wait for the retest and closure above or below, that's good as well. So it just depends on your own preference on how you want to go about it. Yeah, so
Okay.
for today, this signals account, I am down 3,300 for the day. I'm done for the day for this one. I'll be back on Sunday. Yeah, but the last 2 days, the signals have just, even the gold and US 30 signals, mostly I'm getting stopped out here because my AI is entering on impulse. So, but if I was entering some of this, if I was trading, but I can trade 24/5, of course, I would have a much higher win rate than my AI. Yeah, but just use your confluences when using the signals, and also make sure the signal makes sense, right? So for example, here, this particular signal, I said if I was trading this signal that came up on the 5-minute, honestly, I would have entered a sell on gold. The reason for that is primarily because of experience. Friday, as much as you see a reversal happening on a Friday, it doesn't always happen. So for me, what I've learned, go with the trend. And especially if it's a Friday, just do the opposite of what the market is telling you. So here, yes, this buy in the morning made sense, but the reason for this drop right here was news, because primarily before then price had just been trending up. So when we got that 5-minute sell signal on gold right here, honestly, I would have just sold gold, because for me, I'm also, the confluence I'm looking for or I'm using is, a what day of the week is it? It's Friday. They had tried to fake people up that gold is going back up, but guess what? They went and kept going back down. And what are a lot of retailers trying to do here? They're trying to just catch this reversal, this buy and buy here. So for me, because I have all these confluences, not to mean that I'm better than anybody, but what confluences do I have around? If gold is going to keep dropping, it's more than likely going to come around what area do we have here? We have a possible double bottom on the 1 hour. What does the double bottom on the 1 hour line up with? Lines up with a supply zone within a supply zone, about like 1 or 2 supply zones within a supply zone. Lines up with a 30-minute bullish high and bullish low and a weekly low. Remember, price does not just move the way it wants. Price moves from one area of liquidity to another area of liquidity, whether it's hourly, 4-hour, even down to the 15-second candle. Even for me, since I have the Telegram, TradingView Premium, if I wanted, I can trade the 1-second candle, right? If I wanted, I can trade the 15. So even on the 15 seconds, like literally, there is same thing with the 9 EMA, right? You can see entries right here. So price moves from areas of liquidity to areas of liquidities, whether that's monthly, whether that's daily, whether that's the 15 seconds, whether that's the 1 second, price always moves to those zones. So if I'm trading that, honestly, right, just hop onto that sell. Like right now, I'm already up. I think that's 5% for the day, or maybe 4%. Yeah, so I would have just entered this sell, 50 pips TP, 50 pips stop loss, and then had a so this is what I would have done. I was analyzing the market at that point, I know, but for me it doesn't matter because it's Friday. So, and I'm already up heavily for the day. So I would have just have done that, hit full TP, and then guess what? Waited for price to come down here. If I wasn't in front of the charts, set a pending order, a pending buy order, because I know that price is likely to go back and retest the trend line. Same thing, set a pending order down here, a long position, maybe around the demand zone, within a demand zone. So depending on your spread, maybe you couldn't have gotten filled in on this trade. And then did the same thing, 50 pips and 50 pips. Easy, oh no, yeah. Easy money. So when you guys hear me saying that trading for me over time, it's gotten easier and easier, it's not because that I know, of course I know what I'm doing, but it comes with a lot of, like, every day I tell a lot of people this, I probably spend like 12 hours a day back testing and looking for new strategies. Like even this indicator I found, I was just reading through trading blogs and all of that, and I found, oh wait, there is a zero lag indicator. So for me, I'm always trying to better my best. So that's why what you see me doing here, if somebody started at the same, like I've only been trading for 2 or so years, for somebody who started along the same period as I started and they've just been winging it, like, you're not going to catch up to me. The only way you can catch up to me is you put in time into this, you learn and learn and learn. Don't worry about failing. Don't worry about drawdown. Don't worry about stop loss. So long as a trade makes sense to you, if you hit stop loss, hey, remember, go back and see, why did I hit stop loss on that trade? The other, like earlier this week, there's a trade we took on what, US 30, right? This particular trend line we were trading and we got stopped out, right? We had a sell. I remember that day, short position. It's actually the only losing day we've had. Wait, oh, we came back to break even. I think it was one of these days. We had like two trades. One trade brought us back to either break even. No, it wasn't yesterday. It was, I think, Tuesday. Oh, no, wait, my bad. It was Wednesday. Did we have CPI last week? Unless I'm messing up. But I think it was Tuesday because we had a losing. We lost on US 30. Let me just see. Because that's another important thing that I want to go over. When is the last time we lost on US 30? 419, yes. So that was Tuesday. So this particular trade. So you can see this trend line to the upside, right? So that was the hourly trend line. So what happened was we had a sell, I think it was this candle. Yeah, we had a sell around either this one or this one. We had a sell, a 50 pip TP, 50 pip stop loss. And we got an entry on the 5-minute. Oh, wait, no, that's not it. 50 and 50. It was one of these two candles. So we had entered into a sell, but what happened is they came up and faked us all the way back up, and US 30 kept dropping for the rest of the day, right? So one thing that I want to reiterate, any trade that I call right here on the live session, always ask yourself, even though I say that I hopped in, like maybe some people hopped into that trade with me and got stopped out, right? So how did we used to get all the no drawdown trades that we are getting a few months ago? We always ask ourselves, if we are entering into a trade, what are the 3 confluences we use to enter into a valid trade? So let's say we've gotten a valid trade here. Okay, what are the 3 confluences we use? The first one is retest of the 9 EMA. The second one is retest of a trend line. The third one is retest of a structural area, so a high-low, established high-low period. Okay, of all those 3 confluences, which of those 3 entries will give you an optimal entry, right? Ideally, minimal drawdown entry. So sometimes it will be the retest of the 9 EMA. Sometimes it will be the retest of a trend line. Sometimes it will be retest of structure. So like the one we entered, the sell we entered a few days ago or 2 days ago that we got faked out, and then US 30 came back and dropped to TP. I remember we entered on impulse, right? It was closure below the trend line, and then we entered on impulse. But if we could have waited for the retest of the trend line or retest of the 9 EMA, we could have had a little bit more buffer. However, based on back testing, that trade would have still gotten stopped out because we had a candle spike up about 2 p.m. or 3 p.m. And then during Asia and London, US 30 melted to the downside. So ideally, what I'm trying to say, for me, it would have made me feel better if we got stopped out because we found the optimal entry, as opposed to we hopped in on impulse. Even though the trade was valid, we still hopped in on impulse. So it would have made me feel better losing the trade knowing that my entry was actually optimal. So that's the, whenever, even right here when I'm calling a trade, don't just hop in on impulse. If you want, that's on you too. But if I say I'm looking to buy here, ask yourself, where's the retest of the trend line? Where's the retest of the 9 EMA? Where is the retest of a high-low structural area? Which one of those three things will give me the best entry? And so long as you have that, just wait for price to do that. I remember during, especially like last month when we had all these back-to-back winning days, that's what we were doing, right? We were waiting for price to come back to us because I remember I was always saying, don't worry about price going all the way up, or all the way down. Let's just wait. At the very least, you can set a pending order. So going forward, always, sometimes I may forget to say that, but always ask yourself, where will you get that optimal entry? So gold, same thing. You can see here it's testing some sort of, I think I do see a supply. So this zone became support, and you can see price started moving up from there. But right now it's acting as supply. But right now, honestly, I would be looking for gold to continue going down. Even though I'm still bullish on gold, the reason I would look for it to continue going down, it's because it's Friday. Because I can see a lot of people trying to just catch the reversal. But for me, if I was looking for any trade, I would look for a sell on gold. The only area I would look for a buy on gold is if gold comes down here. And then guess what I would do? I'll just go and wait for gold to close above the 9 EMA on the 5-minute to retest the 9 EMA and close above. And that would be easy money on gold. Yeah. So right now, I think the market is just dying down. Not sure if so this trade is break even. So for this one, as much as if I was taking this trade, I've just secured half, around 50%. But you know what? For this, we'll just put break even for the day. But hopefully you guys made money from that trade. So remember, if we have hourly and 4-hour, hourly and above bullish highs and bullish lows, divide those zones into two, because for this trade, we could have easily bought US 30 down here at the hourly bullish low. Because when we divide those zones into two, we always look at, right? We always set 3 orders. One order at the top, another order at the middle, another order at the bottom. So here we could have entered with a bigger lot size, rode this price to the upside, and then at the very least, closed both positions in profit or closed in a little bit of profit. Does anybody have any other questions regarding any strategies or anything you're having trouble with as a trader?
Yeah, I have some questions. Yeah, first of all, I wanted to have some advice, like, I wanted to know, on your journey as a trader, when did you what was your, when did you start being profitable? What happened? When did you realize that you must change this or this thing to be profitable? I'm asking that because I've been trading for almost 3 years now. And last year I was only using ES, but I saw that I couldn't be profitable with these ES, and I didn't want to I wanted to be free of these years, so that's why I focus on trading manually. But I'm kind of not yet profitable. I think this year is gonna be the right year. But I wanted to hear from your experience, like how did you do to get profitable? Were you like analyzing your data, and just have some advice, you know?
Okay, no, that's an amazing question. So as much as I go through all of this, right, I'm still trying to be not profitable. I mean, I am consistently profitable. I am trying to, so it's actually funny that you asked that. So I've set up a goal in the next year that for me at this point next year, you know, this group will have thousands of people, or at the very least 1,000 members. I want to achieve more freedom in, you know, leave alone even trading. I want to have more freedom in my life. So now money, right? If you have freedom based on what we are doing here, money will be there. So I want to have more freedom to do more of the things that I want to do. Not that I don't have it right now, but you know, I want to have more freedom. So when did I start being profitable? Or what changed? So similar thing to you. So I've been trading since November 2020, and one of the admins in here, Audrey, he's out on vacation, but he's the one who brought me into trading. And initially we used to trade just three or four people. So we used to get on a call, and you know, somebody would just tell me buy gold now, buy NAS now. I never knew what I was doing, right? And I put a lot of money. I'd put in about $15,000 on a live account, and yes, I did lose all of it way back. So it started, right? That's how I started with trading. Somebody was telling me buy, I go ahead and buy. Telling me, I knew nothing about technical analysis. I knew nothing about Forex Factory. I knew nothing about news. I knew nothing about other communities out there. But for me, one thing about me is if I see something, so number one, mindset. Mindset is the biggest thing. So the sooner you, I wish I conquered my mindset on year one. I wish I focused on conquering my mindset and knowing that losses do happen. Look at that rejection off of a trend line, right? The static trend line on the on gold hourly. Oh, I'm sorry, on US 30 hourly. Yeah. So I wish I conquered mindset on year one. If I could go back and tell myself 2 years ago, I would say, don't worry about money. Focus on accepting losses. Focus on knowing why you're winning, and focus on knowing why you're losing. That is the first one. So after that came EA. So I did a bunch of EAs like you. I did with the EAs, I put in a lot of hours back testing and journaling and seeing how far my settings can go before I hit drawdown. It was working, right? I did have a lot of success on the EAs. I do have some EAs trading on personal live accounts that I'm using, maybe make a little bit of amount each and every day. However, I was like, you know, for me, same thing, right? Why are you winning? Why are you losing? Whether it's using an EA, whether it's using yourself, like what happens one day this EA is no longer available, right? And let's say you quit your job and all of that, and you're actually making a lot of money on EAs. What happens from there, right? So the market, as far as we know, we are always going to have market opens, market closures, right? Or instruments to trade. But an EA is specific to the person who's giving you that. So what happens if this one person takes it off of the internet, right? So then I was profitable with the EA, sometimes not consistently profitable, a bunch of times consistently profitable, but there were times where maybe this month, that for 4 months, there's a time for 5 or so months, I was consistently profitable with an EA. I was making like 0.8% a day or 1% a day because I'd fine-tuned my settings. But then I would have maybe 3 months where maybe I would end up at break even. So for me, that didn't make sense because I was like, wait, when I'm hitting drawdown, somebody else in the market is making money. So always think of it that way. So like this trade right here, when we bought, or let me give like just an example. Let's say, and of course we didn't do this, right? But let's say you entered. The other thing, I started looking at the market. Each and every candle is an opportunity to make money. One of the admins in here, Steven, you know, he said you can easily flip a coin and make money, right? So let's say somebody entered a sell on US 30 right here, right? And then let's say they made profit. But let's say somebody else entered into a buy on US 30 up here. guess what? They would feel like, oh, wait, somebody is watching me. And, Audrey and I were always thinking that way. It's like every time we enter a buy or sell on US 30, we have like maybe $5 in profit. And then this thing goes all the way back to hit our drawdown and we end up blowing our account. So it's like somebody is watching us and then they're saying, oh, he bought, so go ahead and dip that thing, right? So that also messed up my psychology, because I got to a point I was like, hey, why is it every time I'm buying, this thing is selling? Why is it every time that I'm selling, this thing is buying? So I was like, wait, if I'm in drawdown, there's somebody out there maybe who took the same trade that I took on the opposite side. So what's different from that person? So that brought me to another story I shared the other day. Even with using EAs, I found that maybe trading, one thing you can do crazy on by using EAs is trade US 30 and maybe NAS or Bitcoin, because I haven't found an EA that's consistently profitable. And that's my next goal. In the next few months, one of my goals is to find AI, or to develop an EA that trades gold. Trades crypto profitably. So that is my next challenge to myself. So you know what I used to do? I would be like, okay, I'm making $300 a day, maybe 300 today, 200 today on US 30 using the EA, but my drawdown is about $3,000 or $2,000. So what I used to do, I used to do the same EA, put it on a copier, but instead of taking the same trade, it would take the opposite trade. So I would do maybe a demo account and then link it to a challenge. So if the demo was taking a buy using the EA on US 30, guess what? The challenge or the live account would take a sell. And you know what happened? There's this thing called Murphy's Law. Everything that can go wrong will go wrong. So the days that I was doing that, my demo would make money. And guess what? My challenge or my live account would lose money. So again, I'm like, why is it that anytime that I try to find something in the system, something always goes against me, right? Same thing with these signals. I told you guys I started a friend's challenge yesterday, and guess what? For the last 5 or 6 days, all these signals have been winning back to back to back. But since yesterday, we had a losing day with the signal, or I had a losing day with the signals, and today I had another losing day. So what is this thing that when I took this challenge for this friend of mine, on day one, that's when these signals started acting up. So again, I look at the bigger picture. I'm like, you know what? It's the market. This growth curve is not always going to go up. So the second thing is learn that, you can't control everything. There are days where, as much as it seems that a trade is going against you, as much as it seems that you're not consistent, just look back and see, wait, maybe here we're making these returns, right? We're making these daily returns, and keep in mind, we're only risking 0.5%. So maybe you're like, just trading by myself, I'm blowing an account in 1 day, in 2 days, or maybe in a month. But what if I just start a new account and say that for this particular account, whatever Michael says to buy or to sell on the live session, and I've learned his strategies, and again, I have access to his signals, and he's gone over how to enter, how to exit. But even though I just want to trade even not his signals, I want to trade with him on the live session. For this account, if I feel like trading it by myself, I'll open a demo and I can go and do whatever I want to do with it. But on this particular challenge, if Michael says to use a 0.5% risk, that is what I'm going to do. If Michael says to use 100 pips stop loss, 100 pip take profit, that is what I'm going to do. Now, I've been there too, right? I followed people and I did that, and I did past challenges with that. Because now if you did that same thing with me last month, and keep in mind, this is only when we started recording the live session. I remember we traded March, like the second week and third week, and even then we had a bunch of wins, but we hadn't started recording the live session. But let's say you joined me on Monday and started just that. By today, you'd have been up 3.28 plus 4.2, you'd have been up about 4. And this is in like 4 weeks. And sure, maybe you need like 6% to get a retry, or to get an extension. So at the very least here, you could have gotten because this is 1, 2, 3, 4. Yeah, here you could have gotten a retry with MFF or FTMO. But at the very least, right, that is better than blowing 3 challenges in a month. So here you could have been like, wait, this guy is onto something. Okay. He also says you only need to find 1 winning signal. We get like 50 or 30 signals a day. So I'll just observe the signals. I'll just find 1 winning one, right? So if I get a gold sell, I'll go on the 15-minute. Does that sell make sense, right? I have access to all these indicators. So for example, I showed you guys with this high low plus trend indicator, you can go in there, turn on show trend. So if you get a buy or sell, and then the trend, it's in a bullish trend, wait, that's a confluence. It's priced above the 9 EMA. Did it retest the 9 EMA? Let me enter that with the same risk parameters, 50 pips TP, 50 pips stop loss. You make an extra, you don't even have to go for 0.5% return. You make an extra 0.1, 0.2 a day. Keep in mind, this also, these little numbers add up. The other thing that also has worked for me, I've considered trading a job. And hopefully, maybe next year I'll start doing this full time, but there's some other things I'm doing in the background. The other thing
Michael, could I ask you a question about the indicator? I know the one that shows you the trend, right? So do you find that, okay, let's say it's in the green area, but it's trending down. Would you still take that trade if everything else lines up regardless? Or do you prefer, oh yeah, you said, yeah, okay.
Yeah. So
okay.
If you have conflicting confluences, always don't try to make it make sense, but just be objective and look at what else is around there. Now, if it was in the downtrend and I'm just in supply zones, I wouldn't take it. If it's in a downtrend and I'm in bearish zones, I wouldn't take it. But if it's in a downtrend, I'm in a demand zone, I'm in a bullish zone, yeah, no brainer. I would take that trade. Yeah. Yeah, so where was I? So for this one, I considered trading right now. I'm considering it as my full-time job. A lot of people go to work 9 to 5. Right here we go live 1 hour, 1.5 hours. So if I can come in here and make 0.5, 0.3% every single day, or on average yearly make 0.1%, that is a lot of money at the end of the day. So for me, what that means, if I make 0.5%, I'm done for the day. There are days where I'll make 0.5% and then I find an entry maybe at 2 p.m. But I'm like, hey, Michael, you already made 0.5%. Wait for tomorrow. There'll be another day. That is another part, right? Discipline.
That's the hardest part for me. I'm not gonna lie. That's the struggle right there for me.
Yep. So you can do a demo, right?
For everybody.
Yeah, you can have or on the other hand, right? There's nothing wrong about making money, but if you're gonna go back to the market, don't see what you want to see. Make sure that, hey, does this make sense? If this trade came up during the live session, would Michael take it or would we take it, right? If you have even a shred of doubt, that's it. Either use a demo or whatnot and test it out. That is it. Or just find a hobby, or go do something else, or back test, right? That's what for me, I do a lot of back testing, or I do a lot of reading. How can we improve? Or just go over why did we lose this trade? Yeah. So if you reach that target, that's it. Forget about it. Another nifty little trick, take off your log off of your MT4 from your phone. For me, most of my main accounts, I don't have them on my phone. I only have them on my computer, so that if I actually want to trade those accounts, I have to get my ass up and go all the way to my computer. Even better, let me go on a walk. If I get a signal, hey, there's no way for me to enter that trade. So for most of your main accounts, don't let them be on your phone. That's another little trick. So consider this as a job. Another thing, right? If you're working your own job and you have a good day at work, do you always feel like, wait, I gotta go back and work at 9 p.m.? Right? At the very least, right? You just wait for your time to get off work and be like, let me go home and sleep or watch a show or whatnot. So it's the same thing with trading. Treat it as a job. Rarely do I find people who are so eager after 5 p.m. they still want to go back to the office at 9 p.m. No. So trading is the same thing. Treat it as you're clocking in at 9:30 p.m. 9:30 a.m. Eastern time, or whatever time you want. You're clocking out at an hour later, 2 hours later. Rinse and repeat. Hopefully we'll be alive today, the next day, and the day after that. So it's the same thing about work. The other thing, right? Following people out there, joining. I've done courses out there. I've paid for courses, I've paid to be in groups. But I did tell you, so the first person I started following, and for now I'm not going to call any names, but they did help me a lot. Definitely the first account I ever passed was from this one person. However, they were taking trades with 100 lots, like on US 30. Some of you have seen me take such trades. But what would happen, I actually passed phase 1 and phase 2. I passed phase 1 in like a week, phase 2 in like 3 days when I was trading with them. But what happened, I never learned about risk management. So guess what? the same way I passed phase 1 and phase 2, literally the first ever challenge I ever took, I passed. But the same way I passed it so quickly, I lost it. And I literally got stopped out. I lost the account because of 58 cents. I went over the maximum drawdown just by 58 cents. The reason for that was because this dude entered a buy at the top. And I was like, wait, this thing kept reversing. Now for him, he knows how to do, right? He knew how to manage his risk because he was doing a 10 pip TP on US 30 pip stop loss, 100 lots, right? That's a negative risk to reward because if he wins 1,000. If he loses 3,000. And that's on a 100K account. That is about 3% max drawdown. When you hit it, max drawdown is normally 5%. So what I did, right? I was like, no, I'm not going to let this trade hit stop loss, right? I trust this guy. This guy, you know, he's good. He's very good. But I never understood that no matter how good a person is at trading, they're going to lose. Nobody has a 100% win rate. Also, if somebody tells you they've never blown an account, it's either that's their first account they just got yesterday. So of course, maybe they haven't blown an account. Number two, they're lying to you. So what I did, right, I kept extending the stop loss. And that's why nowadays I'm so every trade I enter has to have a TP and stop loss. That is a non-negotiable for me. If a trade does not have a TP and stop loss, to me, and trust me, those trades that you enter without a TP and stop loss, those are the trades that will go into drawdown and blow your account. For some of these trades that we have TP and stop losses, guess what? The times we've gotten stopped out, price normally comes back into take profit, right? So that's another thing, right? So you're like, hey, last time I put a stop loss, I got faked out and then the trade went back in. So that's why I always, you know, some of the people I've followed, they always say, oh, guess what? The trade came back and hit our full TP and we just got faked out and, you know, we could have made this amount of money. Sure, sometimes you'll hear me mention that, but you won't hear me mention that we could have made 5,000. I'll say, yes, we got faked out and the trade came back down. And then what a lot of people do, they think that's going to repeat in the future. So in future, if they enter a trade and they have a stop loss and then they see price going to the stop loss, guess what? They start adjusting the stop loss. And that's when Murphy's Law will literally be waiting for you. That's the one, that's one of those few days that the trade will not come back down and then you end up blowing your account. The other way to think about it, for most of you who've had demos, I've had demos where I've turned 100,000 into 5 million, right? I think we've all had that. But we've had demos where we have let price go into drawdown, maybe 100K account. We've let price go into drawdown and we are in drawdown about 20,000 bucks, right? But we didn't care because it was a demo account. Now, if you think about it, the trade maybe you had that you let run into drawdown 20,000 bucks, the risk if you let stop loss hit, you'd have only lost 1,000 bucks. And guess what? After that, you could have gotten a trade to help you recover the loss and to even make you more money. So that's why I always insist, always have a TP and stop loss. The other thing, if you're using a demo account, don't just use the Hugo's Way one, use the FTMO ones, because the FTMO ones, teach you how to do risk management to prepare for the challenge. So that way you can know, okay, how much drawdown did I have for today? Like the one I'm doing for my friend, the one that I started today, yesterday, and it's just copying those signals, and the signals have been weird the last 2 days. I'm down, so it's a 50K account. The account is about 47,500. So, you know, that's nothing big. You know, I'll come back next week. So, but for me, I'm letting everything hit. So long as you let each trade hit stop loss, you will always have a chance to recover that loss. If you don't let your trade hit stop loss, you have a high likelihood of blowing your account. So again, find people. So I found that person. After that, after I was done learning what I learned from him, I went and tried to find, not to try, but once you start following some of these people, especially with the YouTube algorithm, you'll start getting notifications or suggestions about, oh, this person is doing live trading. So I hopped from group to group. Like, for example, this Death Cross and Golden Cross, I learned it from the previous group I was in. So after I was done with this, there was no other value I was seeing by being in that group. You know, that's not to say that they're not good. Sometimes growth is not that where you were isn't good enough, because definitely I thank heavens or whatever it is you believe in that I passed through all of those things, because they made me a better trader. So now I decided, hey, with whatever I've learned from all of these experiences, let me now focus on doing it for my own group. So whether it's myself, whether it's other groups out there, find other people to learn from, and then don't just take it automatically as the gospel. Analyze, hey, if this person is saying wait for the 9 EMA, if this person is saying wait for the trend line, let me go back and just draw it, right? Use the backtest or use the replay function on TradingView. Just go back and say, okay, today I'm just gonna apply the strategies. I know based on what I've seen on the live session, it works, but let me see if I can replicate this just by myself. So you come in here, for example, here on the hourly, you can easily go back and just replay this trend line, right? So you say, okay, I see this trend line right here, so let me replay this. Let me see what's going to happen on this. So this one, of course, it wouldn't have been there. So let me see what's going to happen on this trend line, because I hear Michael talking about watch out for these trend lines on the hourly. So you just continue replaying it, and then you just keep saying what's going to happen, and look at what's happening, so that the next time such a pattern identifies itself, you'll be ready for it. And then you'll know that here, if I take a sell and the confluences align, especially we have like an hourly bearish high here, or we have a 4-hour bearish high, next time, instead of risking maybe 0.5%, hey, maybe I'll risk 1%, because by backtesting, to me, this is probable. Yeah, so find things you can learn, find people you can learn from, whether it's me, well and good. If it's not, if you've learned what you can learn from me and want to move on to other groups, I'm not going to take offense to that. For me, as I said, my goal here is for you to be the best trader you can, whether it's with me, whether it's with somebody else, really, I don't care. The goal is for you to be the best you can. The other thing, never stop learning. So same thing here, you'll see me 1 week I've said, oh, hey, guys, I just found a new indicator that's, that's not lagging on the EMA. How can we use it? Right? I'm always finding new things. So don't just stick to what we've learned over the last month. So what we've learned over the last month may not apply for the next 2 months, for the next 3 months. Look for another new strategy. Maybe there's a strategy you found just by yourself that we're not applying here. You can tell me, oh, hey, I've observed that when price reaches this point, this is how it reacts. And then you're like, can we start looking at that going forward? Yeah. So in a very long way, but I did say today on Fridays, we'll call them feedback Fridays. Just focus on conquering your psychology first. First, accept losses are there to be had, and profits are there to be had. That's number one. Have a set TP and stop loss for each trade. That's going to help you avoid FOMO. Whether you want to pin some sticky notes on your laptop or screen, like for me, for you guys, on the Discord, I did send you like, I have like a sticky note on my monitor that says stick to your strategy. So honestly, ever since I had that sticky note on there, I haven't FOMOed into a trade for like a month. But before then, even when I used to trade some of these 100 lots, I just used to be like, okay, I'm in. But when I saw this, I'm like, if I'm making 0.5% a day, I am making way more. And remember, even worldwide, also look at a bigger scale. Worldwide, for you to be in the top 1% of everybody in this whole globe or earth, you need to make, I think it's $50,000 or $40,000 a year, right? You can easily make that at a job. If you can make that in trading, even better, right? So I did talk about it a few days on the Discord. Another way I started being consistent. However, do the math. So how much are you getting paid a year? So let's just do the math. So let's just assume somebody's getting paid, just for ease of math. Let's say they're getting paid $120,000 a year. So that means they're making $10,000 a year, right? That means they're making, $10,000 a month. In every 2 weeks, they're making $5,000. Okay, let's do the 2 week, because a lot of people get paid bi-weekly. So if you're getting paid $5,000, and this applies whether you're getting paid $50,000 a year, I'm just using the 120,000 to help with the math. So if every 2 weeks you're getting paid $5,000, and that's before taxes. So after taxes, that would be around $2,500 or $3,500. But before taxes, you're getting paid $5,000 every 2 weeks. Do this. While trading, once you get your first funded account, and here's another thing, I'm not trying to be negative, but you're almost always going to blow your first funded account and maybe the next 2 or 3. That is a given. The probability of that is very high. But if you're making 5,000 every 2 weeks, or let's just use the 10,000 a month. If you're making 10,000 monthly before taxes, when trading, when you get your first funded account, aim to make half of that. Because I believe anybody who's interested in trading, they're not doing this for fun. Of course, there are people who have a shit ton of money and they're doing it for fun. But for most of us regular traders, we want to do this for life for the next 10, 20 years and hopefully pass it on to our generation. So if you're making $10,000 at your job before taxes a month, aim, once you get funded, the first month, aim to make half of what you make at your job. So if you're doing 10,000 a month, aim to make $5,000 a month in your first month of your funded account. So what does that mean? And this is where the issue comes in. 5,000 a month is let me calculate this on my calculator so that I don't become a meme on the internet. 5,000 a month is divided by 4. That's $1,250 a week, right? $1,250 a week, that's on 100, let's say it's a 100K account. $1,250 a week. How many people are gonna be satisfied while making $1,250 a week on a 100K funded account? I've seen people trying to go for what, 20,000 payout, 50,000 payout, and guess what? Yeah, sure, maybe they post a payout 1 month, you're not gonna see them post another payout for another year or so. So the first week, aim to make, if you're aiming for 5,000 a month, aim to make 1,250. If you make it on day 1 of the first week, close that account. Close, like literally close that account. Best case scenario, start another challenge because you're already getting a refund off of this challenge. Remember, this is a marathon. It's not and you're comparing, forget about what other people are making every day, right? If I make $5,000 today, how are you going to benefit from that? It's not like I have a profit share with you guys. If I lose $5,000 today, are you going to help me pay for another challenge? If I blow my account today, just trying to show you guys, oh, hey, Michael is making $10,000 a day. Like if I had to blow all my accounts today, if I came to you guys and said, hey guys, I just blew all my accounts because I wanted to show you guys that I'm making 10,000, how many of you guys would help me buy new accounts, right? Probably nobody. On the other hand, if I make 20,000 today, how many people are going to make 20,000 in one day and then go back to their community and say, hey guys, I just made 20,000 a day. I feel like giving everybody $500 for everybody. How many people are going to do that? In any case, you're going to probably find them going to buy a Maserati and then just look like they're living the life, right? For me here, based on the way I was raised, that is not me. I just want you to be better, right? So this 1,250, if you make it on week 1, close that account, wait for the next week. At the very least, use 0.01 lot sizes. Okay, when the next week happens, when the next week comes, same thing. Aim for 1,250 in that week. This 1,250, let's see how much it is in a day. That is $250 a day. For you to make half of what you make a year, so half of 120,000 would be 60,000. So for you to make $60,000 a year, you only need to make $250 a day. Again, let's go back and think, even for the groups that you guys have been in, how many people do you know with a 100K account that only go for $250 a day? Right? Minimal or none if there are any that show their results, right? So stick to that. Make your 250, go. Wait for tomorrow, do you another 250. At the end of the week, guess what? You have that. Okay. Now, if you're consistent with this strategy that for 6 months, so let's say for 6 months, you have consistently made half of what you make at your own job for 6 months, then guess what the next step is? Don't be smart. Don't change anything. It has worked for you for 6 months, right? Don't try and change anything. Do the same thing, but this time aim to make the same amount you make in a month at your job on trading. Again, don't be smart. Use the same strategies, rinse and repeat. That's why right here, slogan is learn, rinse, repeat. So whatever it is you are doing to make 250 a day consistently. So some days, of course, you lose, and especially if you're going for 250 a day, right? When you lose, you're probably going to lose like $50 here and then make 200 because, of course, you're not over leveraging, right? So sometimes maybe you'll be down 200 a day. Other days, maybe you'll be up 300 or 500. But let's say you've consistently on average made, let's not even say 250, 150 or 200 a day over the course of 6 months. Like if you were to divide your average return over a course of, because not every day will you get $250, because some days you'll have losers, but ideally you're sticking to the strategy. So even though we cut the 250 to like 150 a day for 6 months consistently, do the same thing. Whatever it is you are doing, aim to make the same amount of money monthly in trading that you are making at your job. So guess what? What you'll just do here is you'll just double the lot sizes, right? Either double the lot sizes, use the same risk to reward, or double the TP and stop loss, double the TP and stop loss. Yeah, or double the TP and stop loss, right? So maintain the same risk to reward and double. That is the easiest thing. So most of the people, most people, 90% of traders fail, not because they're not good, right? I know a bunch of smart people, but they struggle with, oh, I need to always be trading. No. It's because they don't have these goals. So long as you set those goals and you're not comparing yourself to me, to Steven, to Dean, to Audrey, to whomever else is up there. If somebody wants to post their profits, well and good, right? But know that, hey, if Michael is making this, he's no smarter than me. It's only because he's had a head start and because he maybe backed us like 5 hours a day or 10 hours a day. If I start doing that, hey, in a month or two, I'll be like Michael or even better, which is my goal for you guys. So hopefully I answered your question. I think that was desire. So number one, forget what other people are doing. Have your own site and just do those little planning. Always break down. It always comes down to the daily return, percentage return. And again, don't focus on money, just have a percentage return. So 1% of, whether it's 1% of 100K, 1% of 10,000, at the end of the day, it's always going to add up, and just stick to that. Don't worry about somebody making 100,000. Don't worry about somebody buying a yacht, right? You don't know their story, right? Some people around here, right? They might use their parents' money or their family's money just to look like they're doing better than you. But at the end of the day, I always say this, at the end of the day, it always comes back to you when you're alone in bed. That's the reality of every single one of us. As much as somebody can look like they're living the good life, you don't know what they're going through like in their personal life. So don't compare yourself with other people.
Yeah, that was great, bro. That was great. I was listening to something today, and I just wanted to share and know what you think
Michael,
about it.
I have a question, but okay, I'll let you finish.
Yeah, go ahead. No problem. Go ahead.
You sure?
Yeah.
Yeah, Michael, I have some question because like it's my first time to join to this live. So my first question is, I see all the signal is look like is coming for 20 pip, 50 pip, 100 pip. So that will be very easy to manage your risk management. Like, when you take a lot size, all the time you prepare yourself to lose 20 pip, 50 pip, or 100 pip, depends for the signal. So that was very good. And you've been explaining about like, okay, when you get, when you make like 250 a day, 150 a day, you just, you can walk away and leave the market because tomorrow is not a day. But the point is, if tomorrow you lose 1K, that bring you back to something, is not feeling good, right? So in that situation, what you really advise, because like you've been saying, like risk management, you learn about risk management to another group, and what is really a big side for that. And another side, I just get the indicator and I keep looking for TradingView, and I see you using SMC from Luxalgo, and I was following the signal to this morning, everything you put in the from the bot and everything. And I don't know if you back test, like trying to look like a change of character, BOS, and following the trend, because everybody know when the trend is up and you have change of character at the downside, and it's very close to maybe, I don't know, supply or demand zone is very very good signal to take. Like this morning,
Mm-hmm.
We get sell from US 35 minute around 10:30. And if you put Lux Algo, you will see like the price was around around demand zone.
Mm-hmm.
So, and technically when you wait and the way your indicators keep working and you go always down, making change of character, you know, so every time the market make change of character, market have to come back, the pullback and before to go with the trend. So I don't know if you look at that or you just look at the moving average you just show, you know. So
Yeah.
that's only I check it out today. So I want to let you.
Okay. So to answer those questions, so number one, so you did say 150 and then 1,000. So let me tell you this. If your aim is to make 150 bucks and you lose 1,000, of course, if you make 150 for the next 5 days and you lose 1,000 one day, it will take away 2 weeks worth of profits. But what right, the you know, I can see a fallacy in your thought process. The reason I'm saying that, if you make 150, if your goal is to make 150 a day and you end up losing 1,000 bucks a day, your risk to reward, your risk management is off. Either you're using a negative risk management. So this is what I mean, right? If I'm aiming to make 150 a day, right? Let's even think about US 30. So ideally our TP and stop loss is 50 pips. So for me to make 150, I need and our TP is 50 pips, stop loss is 50 pips. So remember, here's the other thing. I stopped focusing on and I'll just show you a demo of that. I stopped focusing on money. I don't care whether I'm making 1,000 today. I don't care whether I'm making, what I care about, I've set my TP and stop loss parameters, and I know for every trade I'm risking 0.5% for. So for me, if you ask me, hey, Mike, you say that you, for this trade, you're risking 0.5%. How much is that on a 200K account, right? For me, it doesn't matter. Well, it mattered because the only time it mattered is before. So for me to start thinking in terms of percentage types, I literally, and I've sent this on Discord, I literally sent a picture. I literally sent a picture where I have this pinned to my monitor. Let me see. It's a sticky note that I just calculated, but ideally, I can find it, of course. I just calculated how much monetary value is 0.125%, is 0.25, is 0.375, is 0.5. Okay, how much money is 0.5% on a 200K account? That is 1,000 bucks. Okay, for US 30, my TP and stop loss is 50 pips TP, 50 pips stop loss. So for me to risk 1,000 bucks, which is 0.5% of a 200K, and I'm going for a 50 pip TP and stop loss on US 30, that's automatically 20 lots. And now, of course, I have a trade manager that automatically does that. So that's number one. That's that's one thing. If it works for you, there are people who it works for, but for me, I found that focusing on money was actually detrimental for me. Focusing on monetary returns, let me not say focusing on money. Now, if that's the case and I'm aiming to make 150 bucks a month, let's say I entered this trade, the trade we took today. So for me to make 150 bucks, no, not a month, a day. So your daily target, you want to meet your daily target in 1 or 2 trades. So if I wanted, so this was a filler trade. So this for me, I would have aimed to make 75 bucks for the day. Actually, wait, the 150 was an average return because there are days you lose, there are days you win. So if I'm looking to make 250 a day, and today is Friday, I said this was a filler lot. And keep in mind, this one, we said 100 pips TP, 100 pips stop loss. So I feel a lot. I'm not really going to try and make 250 today on a Friday based on we had news coming up and everything. So for this one, especially, again, it was a feel a lot. It wasn't an official trade. It wasn't an official trade. It wasn't so all our main trades we take with a 0.5% risk to reward. So we risk 0.5%. But for this one, since it was a filler trade, our risk was half of that, which was 0.25%. So for this one, I would have went to, or try to make $125, so that if this trade lost, I would have to lose, I would just lose $125. So for this one, trade would have gone into profit. So I always say when trade is 50% in profit, you secure half and leave a runner. So 50% on either secure half and leave a runner, or just set break even. So at the whether you're going to secure half or whether you're going to set break even, at the very least, you always need to set break even at 50%. So let's say I didn't secure half here. This trade would have just come and hit break even. Okay. If I secured half at around 50% of the trade, 50% of this would be what, maybe $75 or so. So let's say for this trade, at most I would have made either made like $70 or ended up at break even. But let's say this particular trade, let's say it wasn't a Friday, and then it was a trade that we called and said, for this trade, use a 0.5% risk. So 0.5% risk, you're aiming to make 250 for the day. So let's assume, let's find a losing trade, right? Let's just simulate a losing trade. So for a losing trade, let's simulate this. So let's say we went actually long here on the close of this candle, and let's say, right, let's say it was a valid trade. We didn't FOMO into anything, so we did this 50, right? Of course, that hits stop loss. How much would you lose on that trade? Right, you'd lose if your goal is to make so for you to meet your daily target, normally here we sometimes get 3 trades a day, but at the very least we get like one trade a day. So you should aim to get to your daily target with 1 or 2 trades. So let's say here you went with your whole daily target, so 250. Guess what, if it was a 0.5% risk, actually even 0.5% risk, you wouldn't have made 250, but just break that down. But there's a reason I'm using percentages. So you go ahead and lose that trade, right? So if I come in here, let's look at the return, and this is again why I'm not focusing on monetary returns. So these trades that I record here, and I've given you guys access to track this, right? And track our returns. If you open that, you'll have exactly what I have on here, but with the read-only permission. If you look at this, right? I don't have anywhere that I've written this day we made $5,000, right? But all of this converts to money. So this is the account I use as my main account to copy is a 200K account. So here, this Monday, or let's just do the weekly, or this Monday, I made 0.875 out of a 200K account. This day, this was a news day. We made 1.25% of a weekly account. And these are not trades that I take without you guys seeing. These are trades that I take on the live session, and I say I'm entering a sell here, so you can enter the sell or buy, use a 0.5% risk, we use a 0.25% risk. So for you to lose, if your goal is 250 a day, there's no single day that I've lost. If you say 1,000, I'm guessing, let's just assume it's a 100K account. 1,000 is 1%. Here, yes, here on Wednesday, we did lose. I remember this was news day. We had like 3 sessions. We traded CPI, we traded FOMC, and we had a live session. And unfortunately, this day, all the trades hit stop loss. But that's the only day we had a minus 1.25% loss. Now, that's nothing, given that during this whole other time, we had in the month of March, when we started recording the last month, we had a 3.28% return in just 1 week. This month alone, so far, we have a 1.875% return, regardless of the minus 1.25% risk we took. So never worry about, oh, if my goal is to make 250 today, what if I lose 1,000 tomorrow? If your aim is to make 250 a day and you're losing 4 times the amount of your daily target, that either means you're over leveraging, also means that, or might mean that you are, maybe it was a bad day, or maybe you have a negative risk to reward. At the very least, so this is news. So during news days, so you can see this day when we lost minus 1.25%, and these are the day when we gained 1.25%. These are ideally, I wouldn't call them regular days because they were news days. We are just trading news. But on the regular days, let's see, our returns on regular days without heavy news, the average return is maybe what, 0.5, 0.4, because you have 0.875, 0.375, 0.28, 0.5. Here we didn't trade the days that have an X. Thursday of this week, we ended up at break even. But you can see on average, we have a daily return of 0.3%. So in no particular day, at the very least on a regular day, I would say if I take 3 losses, I am done for the day. So 3 losses on a 0.5%, of course, is minus 1.25. Sometimes if I take 2 losses, rarely will we have 3 back-to-back losing trades on the live session, because keep in mind, on every day we get between 1 and 3 trades. So rarely, well, we haven't had that other than this day during which was news session, but on a regular day, we haven't lost 3 trades back to back. So yeah, so that's the first one. On the other hand, you can think of it this way, right? The same way you think that if my daily target is 250 and what happens when I lose 1,000, why not think of it this way? Hey, my daily target is 250. What if I make 1,000, right? What are you gonna do, right? Because ideally, based on what we've gone over, if it's Monday and your target is 250 and you make 1,000, that's even a more pertinent question to me, as opposed to the one where we're losing. Because for me, the losing one, this is how I'll deal with it. I'll just come back and look at, hey, we've been consistent. So if I just take my minus 1% for the day for that bad trading day, hey, based on what I'm seeing here, we've just been consistently making it. So I'll make that back in maybe 3 days. And there are days we get even four trades a day. There are days when I'll say for this trade, use a 0.75% risk. So it doesn't mean that if you lose 1%, it will take us 2 days or 3 days to recover. Maybe the next day we'll get a good trade where we say, oh, for this trade, get in with a 1% risk and you recover in 1 day. So to me, actually, the more important question is if your daily target is 2, and which is where a lot of traders fail. If your daily target is 250 and you end up making, maybe because of a spike, because you had or maybe because you identified a good trade that had a 1:10 risk to reward, and you made 1,000, what are you gonna do? Right, so that's something to think about also for you. You asked that question, right? What are you gonna do if you make more than you're supposed to make, as opposed to if you lose more than you're supposed to make? So I've already given you my answer about if I lost more than I was supposed to make, what I would do. Call it a day, wait for the next day, again, rinse and repeat, look for another setup. The other question you asked about the SMC, I don't use the SMC indicator. The reason I have the SMC indicator is because of this. The SMC, so you see these hourly bullish highs and bullish lows, or these bearish highs and bearish lows. So I mark them up from the monthly time frame down to the 15-minute time frame. Now I draw these zones manually, right? Now to do that, they're ideally order blocks. So you'd have to go on YouTube and see like what those order blocks are, or what order blocks are, and understand a little bit more about an order block. But to me, people have different definitions of order blocks, but for me, what I look for in an order block is I look for a trend, and then I look for the previous. So if the trend was to the downside, I look for the previous bullish candle before a downtrend. So for here, I can automatically see an order block on the hourly right here on this green candle, because we had this strong downtrend to the downside. So this one would be an hourly bearish high for me, and then hourly bearish low for me. Other people have other ways of drawing order blocks. Again, I think it's relative how you draw them, but that is what these bullish highs and bullish lows are. So for that, I start all the way on the month, from the monthly to the 15-minute. Daily, I do that, and it takes me about an hour and a half. Now, the monthly, daily, weekly, and the 4-hour, I only normally just have to draw them. Like the monthly, I probably just have to draw it once. The weekly zones, the weekly, daily, and sometimes the 4-hour zones, I don't have to draw them for maybe 4 or 5 days. So more times than not, those higher time frame order blocks, I just have to draw them once every 4 days. Now, the hourly, 30-minute, and 15-minute, those are the ones that change day by day. Now, if price has been consolidating, sometimes I'll find that the hourly and the 30-minute OBs that I was using yesterday are still valid, so I'll leave them. But the 15-minute, more times than not, I have to change it every day. Now, the reason I have the SMC is because if you still don't know, or if you don't know how to draw order blocks manually, the SMC indicator can assist you with that. So let me just go over that again. Let me find a new chart. No, let me just do this. And then let me turn on the SMC. Let me turn off everything else. And then just turn on the SMC indicator. So the SMC indicator can help you also draw order blocks. The price points are going to be different from what I draw, but it will be ideally close to what I have. So for example, the hourly, looks like we don't have anything on the hourly. Let's go to the 30-minute. Oh, wait, I think it's just lagging. So what I would do here on the hourly, I would identify this as this is a supply zone. So order blocks, you can, when I say order blocks, you can use that interchangeably with supply and demand zones. But I'll clarify what my supply and demand zones and what my order. So I've already told you guys what my order blocks are. It's the high and low of a candle of a previous candle before a trend, of the previous hourly or daily or whatever candle before a trend. So here, if I was to use the SMC indicator, and the only reason I have it is so that I can show people who don't know how to draw it manually. If I draw it, everything will come back. But ideally here, what I would have here is an hourly bearish high and hourly bearish low on this supply zone. Same thing here. I would have a hourly bullish high here and hourly bullish low here. And you can see like this hourly bullish high and low ideally pretty much aligns with the hourly bullish high and low we have. But you can see mine is a bit higher, right? So that's why I'm saying sometimes the one that's given by the SMC indicator is different from mine. So in any case, the hourly bullish high and low of the SMC indicator gives a better entry than my manual markups. So and then the other thing I have for each time frame, I only have one hourly bearish and one hourly bullish, because ideally here you also have another hourly bearish high and another hourly bearish low. But ideally for me, I just want to have one hourly bearish pair and one bearish pair and one bullish pair per time frame. So here, if you were to keep drawing every day, you'd ideally end up with hourly bearish high here, hourly bearish low, hourly bearish high here, hourly bearish low. Here we only trade for 1.5 hours. What's the likelihood that price is going to spike all the way up here in 1 hour? Unless we have heavy news, that is not likely. So, or that is less likely. So the points of interest, if you're using this SMC by Laxalgo indicator to draw the bearish highs and bearish lows, draw the zones that are closer to where price is. Ignore all these other zones because ideally you'll just waste your time. When I remember, for me, I have to do this daily, but I don't use the SMC to draw mine. I draw them manually. I do it for US 30 gold and US 30 gold and EU every single day, and it takes me, nowadays it takes me like 40 minutes. Previously, it used to take me like 1.5 hours because I used to go and draw hourly order blocks that are all the way maybe 1,000 pips away. I mean, that was just a waste of time. Now do the same thing. If you don't know how to do it manually, do the same thing and use the SMC and do the same thing on every time frame, and you're gonna have something similar to what I have here. Now, I don't use this indicator to trade. I don't look at these premium zones, these demand zones. Now, the reason I don't look at that is because I have my own supply and demand zones. Now, if I'm drawing my own order blocks and then I have hourly, because when I draw order blocks, I'm looking at what happened to the left of the chart. So sometimes I'll have maybe, let me see if I can find something. I see right here, I see this as a hourly bearish high and hourly bullish, an hourly bearish low, because it's the last bullish candle before this downtrend began. So to me, this is also a bullish, a bearish order block. And then maybe somewhere here to the left, there's another maybe not there, but sometimes how I draw those supply and demand zones. So for me, supply and demand zones are these shades, right? All this red shading or green shading. And if you have a darker shade of red or darker shade of green, I refer to that as a supply zone within a supply zone or demand zone within a demand zone. So how I come up with this supply and demand zones, it's where when I'm drawing my order blocks daily, from all these time frames, it's where order blocks overlap. So if I have 2 hourly bearish order blocks overlapping, then I just shade that or mark the area that overlaps. But yeah, you can use the SMC indicator to just draw order blocks or to draw supply and demand zones. Personally, I do it manually and it works for me. Again, the indicator can also give you an edge. So it's more of a preference thing, right? Do you have time to learn to draw them manually? If so, that's what I'll say, go ahead and do. If you don't have time to just learn, not that it's a bad thing, you know, some people are busy and work like 10 hours a day. So you can use the SMC and it's going to shorten your learning curve. And then over time, you're going to start seeing them automatically, like the same way I can, you know, tell you guys this is a bearish order block. So over time, you'll start seeing those. So hopefully I answered your 2 questions.
Yes, thank you very much, Mike. You really answer all my questions. So your tool is very, very powerful, and the signal too. And you say like maximum sometimes we get like three or 2 signal a day. So what
You mean trades on the live session? Because signals, we get like 30 signals a day.
Yeah. I mean live session, I mean, you know. So but for somebody like me, I'm in news with your tools, all those stuff. When you think so I should be ready to look at my chart and be ready? Because, you know, everybody know market move very well on New York session, like, so as people who live, like, you wait 1 hour before New York opening and you keep watching, you know, checking your indicator, all those stuff, and be ready for any signal, or
so signals, to be honest with you guys, for the signals, if you want to look for all signals are, to me, all signals are good. And this is again, I don't trade with signals, and I've mentioned this before, because ideally I think somebody should learn how to trade by themselves. But to me, if you want to use the signals, this is how you should think of signals. Signals should ideally give you an idea of where price is likely to head. As much as it says buy and sell, you should think of it as, hey, there's a possible buy opportunity, not an automatic buy opportunity. So the signals that I've found you should be wary of, or you should look out for and really, really consider them, are the signals that come up mid-Asia to end of Asia. So maybe around 7 p.m. Eastern Standard Time, or maybe even if you want to be a little bit safer and wait for liquidity, because for these signals, you definitely want either a trend. You don't want consolidation. You want either a trend or a jump in liquidity. So maybe mid-Asia to beginning of London, you want to look out for the signals that are coming up from there. Not to say that the signals that come up during, even before New York, are not valid, but I've found that those ones that come up mid-Asia to before London are pretty good. The New York ones are good as well, because New York, we have a bunch of liquidity, but you want to avoid consolidating markets, which is what we had yesterday. Is it yesterday? No, the day before. So when we first had this change in the curve to the downside. Yeah, so be wary of a choppy market, and then you should be fine. Also, you know, don't just trade a signal. If you want to trade a signal by itself, yes, you'll still be profitable. But the key thing is to always, you know, I've shown you guys this account is taking all US 30, NAS, and gold signals on impulse with set TP and stop loss, it's still winning. So whether you choose to take it on impulse, whether you choose to wait for if you choose to wait for the retest of the 9 EMA, you'll have a bigger win rate than my AI. If you choose to wait for the closure below or closure above the EMA, and then you want to add other confluences that we've talked about, even better, you'll even have a bigger win rate. So the question is, how much time are you willing to put into it? So either way, whether you choose to take it on impulse, you'll still have a good win rate. Whether you choose to take it on whatnot, you'll still have a good win. But let signals be, yeah, I still have an issue with offering signals, like, because I don't want to be the cause of people getting burnt, but please always, always, always use, I cannot stress that enough. I don't want to see anybody blowing accounts. I've been there, right? I've blown accounts, and then I'm like, God, why did that guy send out this signal? And later on I would go and backtest and see, why did he send a buy when price was all the way at the top, right? So I don't want you guys to feel that kind of, and it's a terrible feeling. So that's why I'm saying, when you get a signal, if you're entering on impulse, make sure that you understand the risk. It's better for you to just make sure that the signal makes sense. And then at that point, you have a better, even psychologically, you have a better way of dealing with the trade. But yeah, let signals be just to show you where price is likely to head, and not necessarily telling you to buy or sell. So hopefully that makes sense.
Yes, thank you very much, Mike. Thank you.
All right, Desire, I think you had some questions.
Yeah. It's an advice that I would like to have.
Mm-hmm.
I trade with you during the live, but I also trade by my own on another assets.
Mm-hmm.
And usually I trade using smart money concepts, and my risk reward is usually 1 to 3.
Mm-hmm.
And these like last weeks, I have been struggling with something like for a trader, when we are in a losing trade, we can like hold it until it's touch stop loss or came back to profit. But what I'm struggling with these days is holding on winning trades. Like
No, I get you.
I know that my risk reward is 1 to 3. So got in a trade, I usually use 0.5 risk. So sometimes I got mad on myself, like in a winning trade, and I'm like 1 to 2, which is like 2K, and I'm like, damn, what must I do? Can I take the money, or I don't take the money? And after I don't take the money because it's not part of my strategy, and after I'm like, damn, I'm at 0, but I had 2K. So I was wondering, like how did you come to this risk reward that you have, like 1 to 1? I was thinking, like, maybe because I know that I must go and backtest and look at my data, but I know that, like, most of the time I get easily 1 to 1. So I was wondering that maybe is it better, like, to go to 1 to 1 and like take this profit, or like stick to the strategy? Like, how did you get to this point where you just told yourself that you are going to take 1 to 1 risk management?
Okay. So definitely, good question. To be honest with you, I'm still there, right? It's called holding on to losers and closing the winners early. And that's, I like being honest with you guys. I struggle with that, right? Even here on the live session, you hear me saying that you can secure half or set break even. So step number 1, right? Identify where, if you have a 1:3, number 1, why do you have a 1:3? For me, why do I have a 1:1? The reason is, I've been trading US30 daily for the last 2 or so years, so I can kind of tell how heavy the US30 moves. So of course, I started, like, as I mentioned before, I started trading with somebody who was only going for 10 pips. So ideally having a negative risk to reward, because their TP was 10 pips, their stop loss was 30 pips. So number 1, think of it this way, right? Even forget about whether it's 1 to 1 or whether it's 1 to 3. If you hit stop loss, how many more trades while risking the same amount of money will you need to recover your loss? That is number 1. So with a 1:1, if you lose a trade, you only need another winning trade for you to recover your loss. On the other hand, think of it this way: if you hit stop loss, how many consecutive losing trades do you need to reach max drawdown? Let's say So if you're that again comes up with the risk to reward or the percentage risk you're risking. So if you're, let's say, risking 1% in each trade.
Usually I only go for 1% a day.
Okay, so if and what are you risking in the 1:3? I'm sorry, it's 1%. Oh, so ideally you would be looking to make 3. So risk 1% to make 3%, right?
Yeah.
No. Wait.
I risk 0.5 to make
go.
1 point or to go for 1.
Okay, so okay, I see what you mean.
So like if usually if I lose the first trade, I only need like to take another trade and to go and to go for 1 to 3, and I'm in profit like almost 1%.
So if you lose the first trade, then you're risking 0.5%, right? So for the next trade, you need a 1-to-1 to be at break even, right?
Yeah.
So what would you do if you lost the first trade and then the next trade you entered, you got your break even? Would you close or would you let it ride, or what would you do?
Usually, I rate it like right.
Okay, so I mean, to me that makes sense. I don't see any issue. Now, if you're saying you're risking 5% or something, I don't see an issue with that. Now, the other.
No, sorry to cut you. The issue I'm struggling with is that some days I don't respect this risk management because it fucked up with it fucks with my psychology. Like if I lose the first trade, usually I will like go maximum for. It depends on how I'm feeling. Like maybe I go for 1 to 2 just to go back and be in profit.
So ideally revenge trade, right? So like this, so the issue you have is not really, that's whatever you're using 1:3, that's amazing, right? I know like Dean, who's here, sometimes it goes into 1:7, right? Whatever risk to reward you're using, to me that sounds good. Now it looks like the issue is what your reaction to a losing trade. So what makes you want to, okay, now let me ask a more specific question. The trade you get in back, because I might be wrong, maybe it's not revenge trading. The trade you get back in order to make your money back, is the trade valid or is it not? Are you hopping in just because of emotions, or are you hopping in because the trade is valid? That is the determiner, right? So the trade that you
to be honest, sometimes it happens. I think for a lot of us, maybe 1 or 2 times a month, I'm gonna do some revenge trading because I feel like I don't feel good at losing. But most of the time, I tell to myself that I do my analysis, and if I get wrong and my trade touches the stop loss, it's okay because it means that I'm not at the good side. So I take another trade, I do another analyze, and if all my confluence are good, so I go in the right side. So most of the time I go in the right side after the losing trade. But the problem is I am struggling, like if I'm in profit, like 1-to-1, 1-to-2, and I must hold on to 1-to-3 because a lot of times, like I've been in profit 1-to-2, and after my trades got back and touched break even, I'm like, damn.
Yeah, so let me so I mean the risk to reward, to me, that I don't see any issue, even if it take. See, listen, it's better to have a break even day than a losing day. Also, the issue I'm seeing, you don't have any issues with risk to reward. Now the other thing I would say, if you want to see whether you're going to hold on to them while back testing, whatever instrument it is that you're back testing, how many times has this trade achieved that 1:3? Normally, based on my experience, some of these higher, maybe 1 to 3s or whatnot, it might come up maybe 4 times a month, maybe once a week. Now, if you are a weekly trader and only look for one trade a week, yes, that is fine. But I'm guessing you trade maybe daily like me. Not every day are you gonna get 1:3s. Not every day are you gonna get 1:4s. But every day there's a possibility, high possibility for getting maybe a 0.5% or 1:1. That is the first thing. But there's nothing wrong with your risk management. Also, you did mention that, you know, sometimes you, after the losing trade, you wait for the confluences to align and then you enter and then you see the trade going in on 1:2. Because that has happened, it should also look for the same confluences. Again, same thing I said about having a target. Don't be smart. Use the same thing. You're not doing anything wrong. The other one, let me ask you this question. How many times have you applied for a job or for an admission to school and got denied?
I think one or two times.
Right, 1 or 2 times, right? Same here,
Yeah.
right? So for me, like, believe it or not, there's one time way back years ago, I applied to Walmart. Even Walmart didn't hire me, right? You know, of all places. And but what happened if Walmart didn't hire me, or if whomever doesn't hire you, do you just feel bad and say my life is over, or go back and break the doors and take the doors over of Walmart? No. What do? You wait, you look for another opportunity of somebody who's hiring, and guess what? You make your application, and then, you know, eventually you get hired, or even better, you start your own thing. So the key here is that it's not the end of life. Think of it this way: if you losses are going to happen, literally you are going to lose. That is a, you know, some of these things are, as much as like death is guaranteed in life, going to the bathroom, being hungry is guaranteed in life. Same thing as taking a loss. So knowing that, it's like foreseeing it, right? It's like preparing, because sometimes I feel like how we react to losses is because we don't expect to lose. And to me, that is not a bad thing, but I think it's a dumb way to think about it. I've been there too. I mean, I hate losing, but as soon as I started thinking about it, I'm like, come on. It's like, if I say that
Yeah.
if I don't want to lose, it's like saying I'm never gonna die, right? If you ever meet somebody who's saying they're never gonna die, what would you think about them? So long as you prepare your mind so that whenever that loss does come, and it's gonna come, guess what? You're gonna be like, and that's why I always say, if you lose, look back and say, why did I lose this trade? Was the trade, did I FOMO? No. Did I meet the confluences? Yes. Was everything lined up? Yes. Okay, then it didn't go as planned, right? So it doesn't mean your trade wasn't valid. It just means that's how the market moves. Nobody, even Goldman Sachs, even all these big banks, nobody wins 100%. So long as you just accept that. Another thing, do like what I did. Write a sticky note. If you trade on your computer, put a sticky note on your monitor and say, stick to your strategy. That's what I've done, so that the day that I lose a trade, and then I feel bad and I want to revenge trade, this sticky note is literally on my monitor. I'll look at it and I'll say, stick to my strategy. Do you know why I have stick to my strategy? Because let me ask you this. How many times have you FOMO'd and then you ended up either blowing an account or using your max drawdown, and then an hour later, you saw a perfect trade that you could have gotten, leave alone even 1:3, 1:10, 1:7. How many times does that happen? That you FOMO'd, you either blew your challenge or blew your live account, or attained max, or went into your max drawdown, and then literally even an hour later, you see a trade that met all your confluences. How many times has that happened?
Yeah, so many times.
So many times. So the reason I have stick to my strategy, I have that like mentally mapped, so that when I see stick to my strategy, I remember all those days that I FOMO'd and then price reversed and then did not give me, and then price reversed on my FOMO trade and then eventually blew my account, and then eventually I had an entry. So guess what? I stick to my strategy. I just calm down. I step away. I analyze, why did I lose? And then I'll say, you know what? Let me just go do my thing. And then maybe I wait for a signal. I come back here. I look at the charts and see, oh my God, this is such an amazing trade. I either go for the same amount of risk, or so this is the same way, right? We've had, other than this net losing day, I think it was Tuesday. Tuesday we were down 0.5% or something, but then we had a winning trade that brought us back. So we had like 2 winning trades. So we've definitely, other than this month of March, that we definitely have back-to-back winning days, in this month of April, because we've definitely taken losses. You can see we've had US 30 stop loss hit right here.
Yes, I think it was last week during news when we took like
Yeah,
3
no,
losses.
even leave the news day. Like all these other days that have returns, we've definitely because news is just, that's trading news is something else. These regular days, I think Tuesday definitely, and I think there's this day, Wednesday, yeah, Wednesday, Tuesday and Wednesday were losing days, right? Because Tuesday we had a losing. Tuesday was what, 419. Tuesday was 418, right? So let me see, we probably took a loss on US 30, 418 full TP. Maybe it was EU, or maybe we just went for a 0.25% risk. But what I'm trying to say is that we've definitely had some of these regular days. Just ignore this news day for now. But these are the trades that we ended up either break even or even up just 0.25%. The first trade we actually took was a losing trade, but guess what? We waited and then we saw another trade that we took with a higher. So I think this one, this Tuesday, we had losing, because normally I take a 0.5% risk, or even Monday. So that's why I'm looking at these dates that don't have a 0.5% or 0.75% return. So these days, more than likely, we had a loss for 0.5%. And then I said that this next trade, I think I remember the US 30 trade, that one that won. I said that for that trade, if it does come up, I'll take it with a 0.75% risk. So that's why, like this Tuesday, we had a 0.25% risk because we lost minus 0.5 on a loss we took. Maybe I think it was EU. And then the next trade that was a US 30 buy or whatever, the risk was 0.75%. And guess what? We ended up the day in profit. Or I could have just said, instead of 0.75%, I'll take it with a 0.5% risk. And then this day could have ended up at break even. So same thing as Wednesday. Wednesday was the same thing. I think this day we had one winning trade and one losing trade. Today, this one just came back and hit break even. But the idea behind it is that if you take a loss, make sure why you're losing. If you take a win, make sure why you're winning. And again, if you take a loss, wait. Put that sticky note on your monitor. I'm telling you, it might be simple. It might look simple, but this thing literally changed my trading, because sometimes I was forming, especially you guys know that I was trading 100 lots or 50 lots on US 30. Nowadays, what lot sizes am I using on US 30, right? I still have that account that was trading those big lot sizes, but it's just copying from my smaller account. So I'm not really seeing those big lot sizes. This one was 60, but you can see it lost. I only went for 60 because I had already made this amount on gold. If you scroll up, you'll see my lot sizes on US 30 are like 20 lots or something. So I just stuck to using smaller lot sizes, going for a smaller, you can see 20 lots and all of that. So when that loss happens, let it go. Wait. If you feel FOMO, look at that little sticky note. It says it's the past you telling you, it's the you that blew the account by FOMOing, telling the future you, hey, Desire, stick to your strategy, wait for the next entry, and trust me, do that and tell me if it doesn't work. Maybe we'll see what happens, but I can 100% guarantee you that if you put that sticky note on your monitor, it's going to help with your FOMO. If that doesn't work, come back to me after 2 weeks or after 1 month and tell me, hey, Mike, you lied to me, this didn't happen, and we'll go over what happened. But yeah, any other question?
So like for your when you're using big lots, I think like it's a good idea what you're doing. Like you are using a small account so that you are just seeing small numbers and you are copying to another account. So you don't see those big lots. That's right.
Yep. That's another thing. Yep.
Okay. That's good.
Yeah. Anybody else have any other question?
Yeah, last thing. Sorry, I'm asking a lot of questions.
No. Today is Feedback Fridays. That's fine.
No, I was listening to some podcast today on trading psychology, and
Mhm,
I heard something interesting, and I wanted your point or view on that.
mhm.
The guy was saying that um, that it's better not to have goals and only to stick on the strategy. Like for example, when you start a week, don't have a week goal or daily goal. Just have the goal must be that to stick to the strategy. What do you think about that?
So to me, that's I see what he's saying. Sometimes go, yeah, I see what he's saying. Let me put it
Like,
this. Oh,
like for example, me in my strategy, I have like a daily limit of
mhm,
like 2 trades a day, and like I go like for 1 to 3, and that's all. Yeah, so
yeah.
it was. Yeah.
Well, to me, it's the same thing. Like what he's saying is the same thing, but I do agree with him in this case, right? And same thing with the amount of trades. There are days I used to trade like 7 trades a day, end up making 0.5%. Nowadays, I can do 2 trades and make 1%, right? So number one, he's right. They are right. Stick to your strategy. That overrides anything. Stick to your strategy. However, having a daily goal, the thing with a daily goal, I can see what he's trying to go over. The thing with a daily goal, some people can be like, oh, I didn't make $200 a day today, so I need to keep trading to make that $200 a day. And then guess what? The market just keeps reversing on this person, and they end up even losing $1,000 or $2,000. Now, here's the importance of stick. You can tie all of this in. So number one, what is your strategy? So if your strategy is you should always look for A and A plus setups or A plus setups, right? A setup that meets all your confluences. So long as you have that, like for me, yes, I don't have a daily goal. The only mentally, I don't have a daily goal. For this account right here, I have a daily goal, but I don't have it mentally. I have it set up on the EA or on the Copier such that so long as I have 2 net winning trades, the account closes and it doesn't take any more trades. So for me, I let the system dictate to me whether it meets the daily goal or not. Okay, with my strategy, when I trade live, I don't care about a daily goal. I stick to my strategy. Does this trade make sense? Okay. If I win this trade, I make 0.25%. If I win, I make 0.5%. If you ask me what that is on a 400K, I don't know. If you ask me what that is maybe on a 200 or 100, maybe I know. But if you ask me, okay, you made 0.5 for the day, but what is that on a $500 account? I'll be like, I don't know, but guess what? I made 0.5 for the day. So you can go do those calculations. So I can see what he's trying to say. Yes, the most important thing, always stick to your strategy. For the daily goal, don't let because what the daily goal does is attach a monetary value. If you can have a daily goal and remove the monetary value and just have a percentage return, even better, which is what I've done. For me, my strategy is all of these strategies that I'm using, and then instead of having a monetary value, I just have a percentage return. And then if there are no trades to take, I'm not taking any trades. So at that point, it's not, if we see 7 valid trades on the live session, we're going to take all 7 valid trades on the live session. If we see 1 valid trade on the live session, we're only going to take 1 valid trade. So that's the strategy. So to me, it's one in the same thing. The question is, to you, what is the daily goal? What does a daily goal do to you? So he's ideally saying the same thing. But ideally, yes, I agree. Stick to your strategy. If the strategy makes sense, don't worry about TP. Don't worry if a trade hits TP. Don't worry if a trade hits stop loss.
Yeah, thank you, bro.
All right. Anybody else? I'm getting a little hungry, but yeah, anybody else who has any questions? Okay.
Yeah, Michael. I'm just messing with you, man. you said you were getting a little hungry, so I was like,
No. Go ahead.
No. I was just messing with you.
Okay.
You said you were getting a little hungry, so I said, let me mess with them real quick.
No, it's all good.
Right, bro. I got you.
Yeah. Of all the so we'll be having this every Friday. Not to mean we won't be trading on Fridays, but because Fridays are bound to be manipulated, we'll be trying to tie in what people are dealing with, what people are struggling with trading, what we've learned. I've gone over, like for me, one of the big things that I learned I have to remind myself every time that before I take a trade, we need to wait for the optimal entry, right? Those three confluences for me, that's what I've reiterated or learned. A bunch of you have asked questions, and hopefully you've got some feedback. So always, and don't lose sight that this is a marathon, right? You don't want we have another 7 days coming, or another 5 trading days coming. So you don't want to be next Friday wishing you had implemented what we talked about today on Monday, right? Because on the next 5 days, you could be up another 1% or 2%. So don't, if you find an idea, if you find a strategy, man, go with it. Go, let somebody be stopping you and telling you, oh, hey, wait, we have a new strategy, right? So if something makes sense to you, I'll give you a little joke. In the last 2 or so weeks, I'd gone to see some of the admins in here, Dean and Steven, and we hanged out for a few, like a week and a half. So I make some good beef stew, right? So this one day I told Dean and Steven, oh, I'm making some beef stew for you guys. So I had what I thought I bought. I thought it was beef. But apparently it wasn't beef. But I cooked that stew like it was beef stew, right? I started getting a little suspicious because when I was cooking it, the color wasn't looking like beef. But in my mind, I was like, wait, to me, and it made sense, and it was tasting like I wanted it to taste and all of that. But at the end of the day, Dean and Steve were like, wait, this is pork. I was like, oh, wait, right? This doesn't make sense, because I think I bought beef, but they were like, no, this is, but I cooked it like what? Like the beef stew that I needed to cook. And I think if Dean and Steven are in here, they can say whether it was good or whether it was bad. But the idea is, if something makes sense to you and everything aligns, go
That shit was
ahead.
gas.
It was good, right?
Yeah, definitely.
Yeah, right. So if something makes sense to you in life, let people be coming to you and telling, don't worry to jump into the water. Go in and say, oh, wait, I thought you don't know how to swim. How are you swimming? And it's like 13 feet deep there. And then you're like, oh my God. But then you're like, hey, I can swim now. I can swim in somewhere that's 30 feet. So don't wait too long. If you get an idea, if you get a strategy that works, do it and give your very best. Let people be coming back and telling you, hey, Mike, I know you said, you're making us beef stew, but this is pork. I'm like, no, wait, hey, I thought this was beef stew, right? But it's amazing, right? Based on what Dean said, he said it was good. So let that be. So beginning Sunday, I already told you guys, this one challenge I started for somebody. Unfortunately, I'm down because today and yesterday has been a losing day on the signals, because I'm only using the signals to trade it. But, I'm still going to keep going. I'm still going to keep trading the same signals, because I know that, hey, in the past, this is just a circle of life. If it ends up breaking the account, well and good. But so long as everything here will continue making sense to me, this little comeback, and keep in mind, right, like for the 50K challenge, I'm only looking to make $500 a day. And I have a max loss of about maybe 1,000 a day. So if I had started that challenge on April 11th, I would have consistently made that $500 a day for like 7 days. So losing 1,000 today and losing 1,000 today, 1,000 today and 1,000 the previous day is not really going to phase me, because I'm looking at, wait, this actually has worked previously. So this little thing, sure, Murphy was waiting for me like at the top here and said, go ahead and connect that friend's account and let me show you how we do. And then Murphy just, hit me or dealt me a blow in the back of my head and said, I'll show you, hit stop loss today, hit stop loss today. But I'll be like, hey, Murphy, I'll see you on Sunday, and let's see if you can keep doing what you. So yeah, don't care about what life throws at you. Does anybody have any question? Is that Livy?
Yeah, I got one. Just in general, do you have any like tips or when it deals with golden crosses or death crosses? Any tips to avoid what am I trying to say?
Getting faked out?
Yeah, like how you told me about the tip about the 200 EMA. I did it today for a little quick snipe. because it was too far down when it went. It's gonna come back up, at least touch it. So I did catch that quick snipe. So like little tips like that, that deals with the death cross or the golden crosses that you could.
Yeah, so death cross and golden cross. So like today I did say we were having this death cross on the 5 minute. However, I did say, right, this death cross is, you know, is kind of sus. Why is that, right? US 30 has been consolidating. So when dealing with golden crosses and death cross, you don't want this. You don't want the 209 EMA after forming a death cross and golden cross. They're still back together, crossing in and out of each other. You don't want to take those. And that's why I really wasn't worried about the buy that we took. As much as we had a golden cross coming in, I wasn't worried about the buy that we took because, you know, US 30 has just been consolidating. So I was expecting this to be another fake out to the downside and then another move back up. So when trading a golden or death cross, always zoom out and see how price has been reacting in the last few hours. So here, I wouldn't have advised anybody to trade a golden or death cross. Now, higher timeframes are much better even to look at, right? So even right now on the hourly, it's still dancing around. But what you want to look out for is the last time. So if you're looking to trade a death cross, that's to mean there was another golden cross. So you need to go back in time and find where was this golden cross at. So we had a death cross here on the 5 minute on US 30. The last for a death cross to happen, there has to be a golden cross and vice versa. So you look back, how far ago was the golden cross? Thursday, this was 1835. And this was about 3 or 2 hours. That wasn't really long. The other thing, you want to see what happened after the death cross or the golden cross was formed. So here, after the death cross and after this golden cross was formed, the 9 EMA came back and touched or consolidated around the 200 EMA. Normally, when a death cross, a valid death cross is forming or has formed or golden cross, and it's a good one to base your trades off of. Like when this golden cross happened, you shouldn't have gotten closure below the 200 EMA. So normally when a golden cross forms, when you get a retracement, you don't want to see multiple candles closing below the 9 EMA, because when a golden cross forms, the 9 EMA should support price to the upside. Any retracement should be supported by the 200 EMA. So this right here should have been a red flag for this golden cross. So let's find something that a golden and death cross that. So no. So for here, same. So here, this one was supported sort of, but for me, I don't want to see, I don't want just to try and force something. This one, price came back around. You had candles closing above. However, you did see finally the 200 EMA held. The last few days have been just consolidation on US 30, so not sure if we'll get a good. Okay, yeah, I see one right here. Okay. This golden cross right here is valid, right? Because, is more valid because price is being supported by the 9 EMA. Price came, retested the 9 EMA and continued going up. And guess what? The rest of the period, price has just been going up. And then if you see this death cross forming on the 5 minute, let's see the period 1325. So this is about what? 13. This is about 6, no. Is it 13 hours? About 12 hours or so, whatever. This was 12 hours. So you also want to see the period. So how long was the last death cross? How long was the last golden cross in relation to whatever cross I'm trading? So this was about 12 or 15 hours. Okay, you see this death cross forming. So what do? You go back. So if a death cross is forming, automatically, you know there had to be a golden cross. You go back and analyze the golden cross. Was it valid, right? You come back, you see when this golden cross formed, price retested. So when this formed, at the very least, you want to see price retesting the 200 EMA and being supported above. Even better, right? Even better, you want to see price retesting the 9 EMA and being supported by the 9 EMA consistently. So that was a valid golden cross right here. So you know that more than likely, and this has been the US 30 was trending for the last 14 or 13 hours, then you know when this death cross comes in, more than likely it will be valid because A, the golden cross was valid. So that's a confluence right there. So for this golden cross, if you get an earlier entry, well and good. If you want to wait for a confirmation. So normally because these indicators are lagging, if you guys want, you can play with the zero lag indicators. Let me see. I would have to, let me put the other one so that we are having, because these other zero lag indicators do not have lag. So let me turn off the lagging EMAs. Let me put this to 200. Then let's see. So that, yeah, so in this instance, if you're anticipating a trade, you can use these zero lag indicators. So what I would have done here, I wouldn't have used the zero lagging EMAs. Oh God, I went all the way. I wouldn't have used the zero lagging EMAs to analyze. Don't tell me I missed it. I think I might have messed it up. I think it's this one right here. Yeah. So I would have used so this, I don't want to confuse you guys. So while anticipating a golden and death cross, don't use the zero lag EMAs. So use the lagging EMAs and then hide the or turn off the lagging EMAs and then turn on the zero lag EMAs. And at that point, you can get a earlier entry. So you see, like for this one right here, you could have waited when this golden cross came in, you could have waited for the retest and closure above. So you could have entered. So when the cross forms, actually, when a golden cross, so this is a death cross. When a death cross forms, you want to wait for the retest of the 9 EMA. So here you could have gotten that entry right here. But if you're using the lagging, I'll just leave that to 70 pips since we're doing an example. But if I turn this zero lag EMAs off, you'll see that if you're using the basic lagging EMAs, the entry, the golden cross came all the way here, and your entry would have been this one formed, and then you'd have waited for the retest of the 9 EMA. So ideally, since this is lagging, either your entry could have been down here, because this was lagging, this wasn't yet established. The 9 EMA wasn't here when this one was crossing. So honestly, for this trade, this is the entry you could have gotten. So it still would have hit TP and stop TP for 50 pips. Because this one right here, because this EMAs that I have on here, or the EMAs that we use are ideally lagging EMAs, this one right here, it wouldn't have qualified as a retest of the 9 EMA because the 9 EMA at this point wouldn't have been on this candle, if that makes sense. So if you get a golden, so my tip to this is if you get a golden or death cross coming in, make sure the golden and death cross is based off of the lagging EMAs. Forget about the zero lag ones, using that on your chart. So if you get a death cross or golden, so right here, you see a possible death cross, you come here, analyze the previous golden cross on the lagging EMA, not the zero lag EMAs. Okay, so you analyze that. Is it valid? Yes, it was valid. Come back in here and then make a decision, right? Keep in mind when death cross and golden crosses form, you have a burst in liquidity to that particular direction. So then you ask yourself, if you want to catch the move early, at this point, you see this forming with the lagging EMAs. So at this point, you can hide or turn off the lagging EMAs and then turn on the zero lag EMAs in order for them to give you an early entry. So does that make sense? Livy?
Yeah, so I get everything you're saying. Make sure the golden cross or the death cross is valid. Based on the time frame it's been since the last one. And use the non-lagging EMA until it starts forming, and then switch to the no lag to get a faster entry.
Yes. Yep. Yeah.
Okay.
Yep. Any other person has anything they want to ask? All right. If not, I will see you guys next week. We've had a 1.1% win rate for the week, so that's good. Hopefully, if you did take the US 30 trade, maybe you secured some. If not, you could have been out at break even. But if not, I will see you guys here on Monday. Have an amazing weekend.
All right, y'all be good, man.
All
Thanks
right,
again,
bye.
Michael. Appreciate you.
Mhm.